All right, let's hit the movers board. Pre-market's green, but this board is way hotter than the indexes. SPY's up about 0.5%, QQQ up 0.8 tenths, IWM firm, VIX under 19. And then look at this top line. RFAI up 190% at 36.99. That's not normal tape. That's a SPAC shell going vertical on 15 times relative volume. Next one, Howell. Biotech, under $1, up 129%. And oof, 87 million shares already, 120 times relative volume. Then Jun's, another biotech, up 55%, almost 200 times relative volume. So yeah, here at the markets desk, this is not Sleepy Friday pre-market stuff. This is chase risk, halt risk, fade risk type tape. We're going to chart these one by one, because the board gives you the headline, but the 1-minute candles tell you if buyers are actually sticking around. All right, let's pull up RFAI, because this one is absolutely the crazy chart on the board right now. Market's green, sure. SPY up 0.5%, QQQ up 0.8 tenths. But this is not index beta. This is its own animal. RSAI was showing up around $37 on the movers feed, up huge, with relative volume over 15 times normal. Tiny shell company setup, NASDAQ name, and yeah, this tape is violent. Oof, look at that wick. This is why here at the markets desk, we care about structure, not just the percentage gain. The 1-minute read has this thing opening around 76, ripping up toward 83, and then just getting smashed. Not a clean pullback, a full-on parabolic blow-off into breakdown. Day low tagged near 24. Then it bounced back into roughly the mid-30s. So the key thing, 25, is the danger line underneath. If that cracks again, the bounce is in trouble. Above it, sure, you can get dead cat bounce attempts, but the real monster resistance is way higher, around 75, where the breakdown started. Until price can reclaim that zone with real volume, this is still a busted momentum tape, not a healthy trend. Now the catalyst side is thin. I'm checking the news feed. No fresh press releases showing for RFAI. Filing stack has older May items, including F4 amendments and 13G ownership filings. So this smells more like SPAC shell momentum and supply-demand mechanics than a clean headline reaction. And on dilution, Platform Flag's overall dilution risk is high, with no active shelf showing, but runway is under 1 month. That matters on a small cap shell name. So yeah, charts tradable for tape readers, but this is not a chill setup. It's wide spreads, huge candles, and levels have to matter.
Thanks, markets desk. All right, quick macro check, because the small cap fireworks are fun, but the big machine underneath is actually pretty important here. The tape is risk on, but not reckless. SPY's up about 0.5% at 766.55. QQQ stronger, up 0.78% around 716.5. And IWM's actually leading a bit, up 0.83%, near 300. That's a healthy look on the surface. VIX is down 1.2% to just under 19, so the market's stress thermometer cooled off a little. Not ice cold, but nobody's kicking the vending machine yet. Here's the catch. Bread is still mixed, so this isn't one of those everything ripping buy the whole screen mornings. It's more like risk appetite is back, but it brought a helmet. Mega cap growth is catching a bid, small caps are participating, volatility is easing, and that combo usually tells you traders are willing to take risk before the open, but they're still checking the exits. Now, the cross-asset piece is the part I care about here at the macro desk. Bonds are pretty quiet. TLT's basically flat, down 0.03% at 82.32, while IEF is up 0.08% at 93.07. So equities are green without a big bond market tantrum. That matters. The dollar proxy is softer, down 0.21% to 27.85, while yen proxy FXY is up 0.32% around 57.84. Even if you only trade US stocks, keep one eye on that dollar-yen corner, because when FX starts moving, it can spill into rates, commodities, and then tech multiples before people finish their coffee. Softer dollar also helps explain why GLD is up 1.14% at 420, with the headline backdrop still talking gold holding above 4,500. Oil's also green, up 0.64% to 135.40. So this is not just a clean disinflation party. And crypto? Loud this morning. BITO up 6.5%. Coin up 5.1%. MSTR up 7.8%. The story is pretty simple. Weaker dollar, calmer vol, quiet bonds. Risk assets get room to breathe. What I'm watching from here, QQQ holding that 716-ish area. VIX staying under 19. GLD holding 420. And the 1:45 p.m. ET PMI prints. Because inflation's still that house guest who keeps saying they're leaving and then opens another bag of chips.
Thanks, Macro Desk. Let's hit the movers board and get past the obvious top three. So yeah, RFAI is still the monster print. Howell is still fighting around that dollar zone. Juns is still holding the high-volume biotech lane. We've already got those levels on the scoreboard. I'm not going to waste the open repeating it. Look underneath, though. JZ is the ugly one, down almost 37%, but still doing 21 times normal volume. SUG-P is up 31% on 116 times relative volume, and that float is tiny, under 500,000 shares. ADXN, this is the wild stat, only up 24%, but 582 times relative volume. That's not normal tape. Then you've got the XRP levered ETFs, XXRP and UXRP, both green low 20s, but relative volume is still light pre-market. Market backdrop is friendly. QQQ up 3/4, IWM up 0.8, VIX lower, so if a name is red in this tape, we pay attention. Alright, JZ on the 1 minute. This is the downside check. Price is sitting around $2.10, down 36.9%. Volume only 272,000 shares. But because the normal volume is tiny, that's still 21.6 times relative volume. So the line is simple here at the markets desk. $2. Big round number. If sellers crack 2, oof, that can get slippery fast, because then you're breaking the psychological line after an already nasty gap. If 2 holds, fine. Then the first job is just to stop bleeding and build a base. Not calling a reversal, not trying to be a hero. This is a high dilution risk small cap loser in a green tape, so the burden of proof is on buyers. I want to see whether the 1 minute candles can actually stabilize, or whether every little bounce just gets offered right back down. Now, SUGP, this is the one where the headline number looks clean, up about 31.5%, trading around 365, but look at the structure underneath it. Tiny float, under 500,000 shares listed here, and it's already done about 20 million shares, so yeah, that 116 times relative volume is real activity. The catch is, on a float that small, the same thing that makes it squeeze can make it rug pull. So I'm not treating this like a normal, clean, large cap breakout. I want to see if the bids keep reloading on the 1 minute instead of just one candle ripping and then no follow through. If it keeps holding the mid threes and volume stays thick, that's momentum. If the candles start getting wide with no bid underneath, that's the thin stock trap. ADXN next, and this is the pure biotech volume anomaly on the board. Up 24%, price around 568, but the wild part is the volume. 6.1 million shares versus basically 10,000 average. That's 582 times relative volume. I mean, that's not just a little active. That is the whole tape waking up in one session. Float is tiny too, under 800,000, market cap under 4 million, so again, this can move fast both ways. What I'm checking on the 1 minute is whether buyers are actually defending the breakout candles or if this is just one big liquidity burst. Biotech names with this float and high dilution risk can be savage, so the tell is simple. Do pullbacks get bought quickly, or does every pop get sold into? That's the difference between a real squeeze holding and a volume spike fading back into the open range. Now flip this pocket over to the crypto-linked stuff. XXRP first. This is the Teucrium 2 times long daily XRP ETF, up about 23%, trading around 33.29. Big headline move, but look at the volume context. Only about 351,000 shares. Relative volume 0.21 versus its average. So yeah, it's green, it's moving, but it's not the same kind of confirmed tape we just saw in SUGP or ADXN. And with leveraged crypto ETFs, You've got to respect the daily reset volatility. This can look clean for 10 minutes and then get nasty fast. I'd be watching whether it can actually stay above that 33 area, because if that gives up, the move starts looking more like a gap markup than real chase volume. Now UXRP is the sister read, also 2 times XRP exposure, up about 22.5%, around $16. Same deal, green crypto beta, but only 0.27 relative volume. So the pair is moving together, which matters, but the confirmation is still light pre-market. ISPC now. This is the downside check, and it's a different flavor from JZ. ISPC is down about 21%, trading around $1.80, but the volume is only 408,000 shares, relative volume 0.38, versus an average a little over a million. So I'm not seeing the same heavy volume liquidation profile here. It's more like a quiet fade unless the tape starts accelerating. Tiny float about 1.4 million shares, and dilution risk is marked high, so you still treat it carefully. But for a downside mover, I want to see pressure actually build. The simple line for me on the 1 minute is that $1.80 area. If it keeps leaking below that with volume picking up, okay, then the pressure's getting more real. If it just chops around there on light volume, that's not the same signal.
Thanks, Markets Desk. Let's turn that risk on tape into the AI semi-chain. All right, here at the company desk, the headline is Asia rebounding while bond and oil anxiety cools off a bit. The trader translation is simple. If global risk appetite is improving, the market usually checks semis first. NVDA is on screen, around 218, up about 0.5% in the pre-market. So it's green, but not exactly running away from QQQ yet. And that matters. The macro desk already flagged QQQ around that 716 area. For the company desk read, I want to see if NVDA can hold above 218 and actually lead. Now, the catalyst stack on NVDA is pretty interesting because it's not one clean, simple headline. The fresh news flow says NVIDIA reports earnings Wednesday, and traders are already bracing for a big move around that print. Then underneath that, you've got these ecosystem headlines. An AI compute campus in Ohio tied to exclusive NVIDIA AI compute. A medical AI foundation model collaboration. Robotics data work with NVIDIA Cosmos. And even third-party cluster revenue updates using NVIDIA infrastructure. So the story is not just, quote, chips are hot. The real question is, what actually changes? Does this improve visibility on data center demand, power access, customer commitments, and the timing of capacity? Earnings Wednesday is where the market judges that. Until then, headlines can support the narrative, but they don't replace the numbers.
Thanks, company desk. Quick market minute reset if you're just walking in. It's 9:03 a.m. in New York, Friday morning, and the tape is green, but not chest-thumping green. SPY's at 766.48, up about 0.5%. QQQ's at 716.10, up 0.73%. Russell's actually got the better tone here. IWM at 300.19, up 0.85%. VIX is sitting just under 19, down 1.27%. So the stress thermometer cooled off. Not broken, just less annoying. The story stack is pretty clear. Bonds first, AI second. Treasury Secretary Bessent doubling long bond buybacks is the headline, but yields rebounding anyway is the bond market basically saying, thanks for the coffee, I'm still awake. And then you've got the AI unwind headline sitting next to Broadcom looking for more than $60 billion in AI debt. So yeah, the AI trade is still the room everyone's standing in, even if half the room is checking the exits. Cross-asset check here at the macro desk. Bonds are quiet on the ETF tape. TLT 82.37, up 0.04%. IEF 93.07, up 0.08%. That's not a panic bid. That's more like bonds sipping tea and refusing to participate in the drama. The dollar is softer. UUP at 27.85, down 0.21%, while the yen proxy FXY is firmer, up 0.32%. That matters even if you only trade US stocks, because a softer dollar plus a calmer VIX is oxygen for risk. Gold still bid too, GLD 420.19, up 1.19%. So this isn't pure euphoria. There's still a little helmet wearing in the crowd. Oil's basically flat at 134.70, and crypto's got the loudest green on the board. BITO up 6.22%, Coin up 4.61%, MSTR up 7.39%. My dashboard levels right now are simple. QQQ trying to keep ownership of that 716 area. VIX staying south of 19. And then the 1:45 p.m. PMI batch. Composite Services Manufacturing, because that's the growth inflation mood ring later today. Coming up, we've got another market mover scan, then mega cap watch. So we'll see if this macro bid is actually flowing into the leaders or just chasing the weird stuff.
Thanks, MacroDesk. All right, Markets Desk is back on the movers board and this thing is still busy. Screen up. RFAI is still the scoreboard monster. Howell already gave us that $1 hit earlier. June's is still holding the high volume lane, but I'm not going to waste your time rereading the same top three. The fresh read now is follow through. Who's still getting real bids with the tape green, and who's just sitting there after the first squeeze? Look down the board. SUGP and ADXN are the next two I care about. Both have silly volume versus normal. Different charts, same question. Is the bid still there, or is this where the pre-market crowd starts handing the bag off? Let's pull SUGP first. Oof, this is exactly why the Markets Desk loves the 1 minute on these names. It's up about 32% at 366, but the real headline is the share churn. Over 20 million shares already, and the float listed under 500,000. That is a violent tape. Great for movement, nasty for risk. Recent filings are showing dilution risk is high, so I'm not treating this like some clean institutions are buying story. For the chart, 350 is my first gut check. Above 350, okay, buyers are still defending the morning move. Lose that and fail to reclaim it, then the momentum crowd can turn on this thing fast. That's the line I'm putting on the board. SUGP above 350 to keep the squeeze structure intact. Now ADXN, and yeah, this is the spicy biotech one. 573-ish, up 25%, but the number that jumps off the page is the relative volume, 586 times normal. That's not a typo. Tiny float too, under 1 million shares listed here, so this can move super clean and then get nasty out of nowhere. What I'm watching on this one is the mid-fives. If bids keep refreshing around 550, 560, then the tape is still alive. If those candles start selling into every little bounce and it loses 550, that's the first sign this is turning into liquidity for people who chase the morning pop. Biotech, high dilution risk on the data, tiny market cap. So great mover to study, but you've got to respect how fast the air pockets show up. Flip to JZ now. This is the other side of the board. Down about 35%, 214 last, and the open call out here was that $2 danger zone. So far, the question is really simple. Are sellers still leaning on this, or does it stabilize above 2 and stop bleeding? Volume's not huge in absolute terms, about 280,000 shares, but it's still 22 times its normal tape. So for this name, that's active. If it starts printing lower highs into 210 and then tests 2, that's sellers pressing. If it bases above 2 and the candles stop making fresh lows, and at least you've got stabilization. But under 2, that changes the tone fast. Now, UXRP. This is the leveraged XRP ETF check. So different animal than the biotech runners. 1623 last, up about 24%. But look at the volume profile. Only about 100,000 shares. Relative volume 0.27. So pre-market this can move kind of weird. The level we already had circled was that $16 area. It's trading just above it now. So for me, the read is pretty simple. If 16 keeps acting like a shelf, the bid is still there. If it starts living back under 16, then this move can get slippery fast because these daily reset leveraged products don't always trade clean like a regular common stock. Pair it with XXRP right away because this is the confirmation read. Same XRP linked 2 times daily exposure idea, but XXRP's got more tape here. About 358,000 shares versus UXRP around 100,000. Price is $33.39, up 23.5%, and the area we're watching is 33. If UXRP is holding 16 and XXRP is holding 33, Okay, the pair is confirming. If one starts fading while the other holds, that's usually your liquidity mismatch showing up, not some clean directional message on XRP itself. All right, back to MMA for the cleanup read, because this 45-cent level is still the whole chart. We flagged that downside line earlier, and you can see why. Under 50 cents, this thing is just heavy. Last prints around 45.3 cents, down basically 20%. Volume's about 1.8 million. So yeah, there is participation here, roughly 6.7 times normal, but it's not clean momentum, it's pressure. If it starts living below 45 cents, that's where the sell tape can accelerate again. If it keeps catching bids 45, 46, then maybe it's basing for a minute, but I wouldn't romanticize it. Recent filings, high dilution risk, small cap consumer name. This is exactly where the chart can look like it's stabilizing, and then one filing headline changes the entire read.
Thanks, Markets Desk. Quick check-in here at the Stock Whisperer. This is the show's simulated paper trading portfolio, and the new line on the board is AMZN, long 35 shares at 261.72, basically flat right now, zero P&L because it just went on. The setup is pretty simple. Amazon has that positive strategic growth catalyst, the Prime Video expansion across Latin America, and the mega cap tape is firm enough pre-open that I'm willing to test a small long. Not a huge swing, not a chase, just thesis, level, risk defined. XLRE is still open too. Long 200 from 44.9515, now 45.08, up about 25 bucks. So that one is behaving, but it's not doing anything dramatic. Now the bracket is the important part. On AMZN, the take profit order is sitting at 274.50, and the stop is down at 255.80. The level I'm mentally watching before that is 258. If the headline fades under there before the open, that tells me buyers aren't really defending the catalyst zone. XLRE stays bracketed too. Target at 47.20, stop at 43.90, so no emotion needed there. Cash is still about 55.6K, so we're not overcommitted. On the watch list, I'm still waiting for confirmation. NVDA over 220, PLTR over 176, mRNA over 136. But for now, the only fresh paper trade is AMZN, with the risk already boxed in. Coming up, we'll kick it back into the mover scan.
Thanks, Stock Whisperer. All right, Markets Desk grabbing AMZN because this is the mega cap that actually matters for NASDAQ tone right here. QQQ's up about 0.6, SPY up 0.4, breadth still mixed, and AMZN's basically matching the Q's around 261.77. So no, this isn't a moonshot, it's a leadership check. Daily chart first. Are we reclaiming the top of the base or just sitting in the box? Daily chart, this is a box. Big, clean box. Low end around 230, top side around 270, and then you've got that spike high up at 287.20. Current area is 260-ish, so it's above the 20-day near 260.10, above the 50-day near 249.30, above the 200-day near 238.30. That's constructive, but here's the thing. It hasn't taken 270 with authority yet. The stronger push days had real volume. One day over 129 million shares. And the pullbacks were lighter, which is exactly what bulls want to see in a base. But until 270 gets reclaimed, this is consolidation, not a breakout. So I'm marking 270 above as the daily proving ground level. Clean line. No need to overcomplicate it. Let's drop down to the 1 minute, because this is where AMZN is either waking up or just wasting our time. Look at this. Tiny range. Day low 261.50. High 262.07. Current around 261.72. That's about 57 cents on a $260 stock. Super tight. There was one real volume burst, roughly 32,000 shares on a 1 minute candle, coming off 261.50 and pushing into 262. That candle had teeth. Since then, chop. Oof. That little rejection into 262 matters because it's the whole range ceiling. So here at the Markets Desk, the intraday scorecard is simple. 262 above tells you buyers are trying to take control. 261.50 below, and the morning base loses its footing. Everything between those two is noise. Tight box. Respect the box. Story side. Nothing insane flashing right this second. But the headline stack does matter. The Prime Video LATAM expansion headline, plus recent AWS and Bedrock AI collaboration notes. That's why I care whether AMZN can act like a leader while the tape is green. This is a $2.8 trillion mega cap, not a tiny squeeze, so it needs real index money to move the bigger chart. Coming up, we'll spin back to the movers board. For AMZN, keep score clean. Above 262 intraday gets interesting. Above 270 changes the daily look. All right, Markets Desk is back on the movers board. Same green tape, but now we're checking who's actually holding bid. SPY up 0.4, QQQ up 0.6, IWM leading a little, VIX still under 19. So yeah, risk on enough for small cap momentum, but breadth is mixed, so I'm not giving every gapper a free pass. Look at the top here. RFAI still sitting around $42, up 230%. Howell is still monster volume, almost 100 million shares, up 145. Juns is holding that big biotech bid at plus 72. And then the downside row matters too. JZ down 31, MMA and ISPC still red. We're not doing a lazy leaderboard read here. We're pulling charts one by one and asking, is there fresh demand or is this just pre-market air? First chart is RFAI. Oof, this is the crazy one. $42, up about 230%. But remember what this is. Shell Company SPAC type tape. Financial services bucket. And the dilution dashboard is flagging high risk. So I'm excited by the move, not marrying the story. Volume is real versus its own baseline. 892,000 shares against an average around 38,000. Roughly 23 times relative volume. That gets my attention. On the 1 minute, the Markets Desk is watching 40 as the line that keeps this from turning into a full air pocket fade. Above 40, it can keep trading like a squeeze chart. Below 40, that's where I'd start treating the move very differently. And with these names, spreads matter. If it's jumping dollars candle to candle, that's not clean liquidity. That's a warning label on the chart. Howell next. And this is the one where the volume is just wild. We're talking basically 99 million shares already. About 137 times normal volume, and the stock sitting a little over $1, up about 146%. So the whole read here is the $1 area. If it's holding above $1 and the candles keep building higher lows off VWAP, okay, that's real bid. But if it starts living under $1 again, that can turn into penny stock fade really fast. Biotech, high dilution risk, huge crowd in it. So I'm not chasing the headline, I'm watching whether buyers actually defend that buck. Now Juns, another biotech runner, but very different price zone. This one's near $9, up about 73%. And the volume is ridiculous versus its normal tape. 22 million shares, roughly 230 times average. So now the question is, was that opening burst the whole trade, or do buyers defend the gap? Around this high $8-9 pocket, I want to see if dips get absorbed instead of every green candle getting sold into. If it keeps reclaiming 9, momentum traders stay interested. If it can't hold the bid after that first squeeze, then you start getting that slow leak back toward VWAP. Flip to JZ here. Now this is the other side of the board. Market's green, small caps are green, and JZ is still down 31%, sitting right around 228. That's relative weakness, plain and simple. Volume's not gigantic in absolute terms, about 292,000, but for this name, that's 23 times normal, so the sell pressure is real for its own tape. What I'm watching is whether 228 is just a pause, or whether sellers start leaning on it again. If it keeps accepting below that area on the 1 minute, that's when this goes from orderly fade to acceleration. If it can reclaim and build back over 230s, then maybe the panic cools off a bit. But for now, this is still a loser board chart, not a dip buy celebration chart. Now, SUGP, totally different feel. This is a gainer, up about 30% near 361. But look at the share structure. Float is listed around 468,000 shares. That is tiny. So when you see 20 million shares already traded, 119 times relative volume, this can get whippy fast in both directions. The whole question for me on this chart is 360. Can it hold that zone, keep building higher lows, and force shorts to keep paying up? Or does it lose 360 and turn into one of those micro float traps where the squeeze vanishes in 2 candles? I'm not hyping this. High dilution risk is on the board. Filings are flagged too. but as a tape read, 360 is the line I'd keep circled while it's this active. ADXN next. All right, this is another biotech momentum name, but check the share base here. ADX, CNS disorders, 569-ish, up about 24%. And the relative volume print is just silly. 588 times average on about 6.2 million shares. Float listed under 800,000. Shares outstanding around 660,000. So yeah, that's why these candles can get jumpy fast. What I'm checking on the 1 minute is pretty simple. Is that monster volume still translating into clean pushes, or is it turning into churn around 570? If 570 starts acting like a ceiling and the candles keep wicking, that's a different story than if it keeps reclaiming and holding bid. Small cap biotech, high dilution risk on the board. So this is a levels and volume read, not a fundamentals victory lap.
Thanks, Markets Desk. Quick news brief from the macro desk. And we're starting with the bond market, because that's where the plumbing is making noise. Headline: U.S. bond market turmoil is pushing borrowing costs higher worldwide. What happened is pretty simple. Volatility in treasuries is spilling into global funding markets. So governments, companies, and consumers are all staring at higher financing costs. Why it matters? Every equity multiple on the board is sitting on top of that discount rate stack. SPY can be green around 765.6 and QQQ around 715, fine. But if funding costs keep grinding higher, growth has to justify itself. Bonds are the basement. Nobody wants the basement tour until the pipes burst. Next one. Foreign investors are dumping Japanese medium-term bonds in the biggest outflow in 2 decades. The desk is seeing heavy selling from overseas accounts, and that's pushing Japanese yields higher. Why traders care? Japan is not some side quest on the macro map. It ties into the yen, Bank of Japan pressure, and the global carry trade. This morning, the yen fund is up about 0.32%. The dollar is a little softer, and gold is bid over 1%. That's not full panic, but it is cash quietly putting on a helmet. All right, macro desk on the bell countdown. We're about 8 minutes from cash equities, and this tape is green, but it's not a victory parade yet. SPY's around 765.3, up about 0.36%. QQQ's around 714.6, up about 0.5%. IWM's actually leading a bit, 299.6, up 0.67. So small caps are not hiding under the desk this morning. VIX is 18.97, down about 1%. And that's the little tell. Risk temperature is cooling, but 19 on the VIX is still not exactly beach weather. Here's the chain. Stocks are catching a bid. Volatility is easing. The dollar's softer at 27.85 on UUP, and the yen proxy is firmer at 57.84. That says the market is trying to lean risk on without completely throwing away the helmet. Bonds are a touch heavy. TLT 82.22, down 0.15. IEF 92.97, basically flat. So yields aren't giving tech a huge tailwind, but they're not screaming either. That's the pre-bell balance. Equities want higher, bonds are mildly grumpy, and volatility is just low enough to let traders press the open without feeling like they're petting a raccoon. Now, the interesting part. This isn't just an index open, it's a story open. Gold is firm. GLD 420.51 up 1.26%, so there's still a safety bid hanging around. Oil's only up 0.36 at 135.02 on USO, so energy's not hijacking the whole morning. Crypto, though, is loud. BITO up over 6%, Coin up just over 5%, MSTR up almost 7%. Even if you only trade US stocks, watch that crypto risk appetite. Because when that pocket gets bid, it can spill into high beta growth and the small cap chase board fast. On the company watch list into the bell, BABA has the profit drop versus AI revenue jump tug of war. AVGO keeps the AI chip dead story alive. AMZN's got that $2 billion Latin America content headline still in the mix. WMT is the consumer temperature check after slower sales growth. And mRNA is the biotech risk-off tell after the cancer treatment pullback. For the open, here at the macro desk, I'm watching QQQ's 714.65 area on the downside and 716.70 on the upside. That's the pre-market box. I'm watching VIX around 19 because below it the tape breathes. Above it, everyone starts checking their exits like they smelled smoke. And don't forget, PMI hits at 1:45 Eastern, so the morning can trade momentum, but the afternoon gets the economy's report card.
Thanks, Macro Desk. All right, Markets Desk grabbing the movers board right here. Tape's green, but not screaming. SPY up about 0.4, QQQ up 0.5%, IWM leading a bit, VIX still just under 19. So when you've got RFAI up 211%, Howell up 134%, Juns up basically 70%, that's not the market lifting everything. That's single name chaos. Look at the volume column too. Howell over 103 million shares already. Juns at 22.8 million. SUGP 20.8 million. ADXN, tiny thing, 592 times relative volume. Oof, that's where the open gets spicy. I'm not chasing percent gainers on a board read. I want the 1-minute tape. Who holds VWAP? Who stuffs the open? Who turns into a liquidity trap? Let's pull RFAI first. Top of the board. This is still the wildest chart on the screen. 39.62, up 211%. Only about 929,000 shares traded, but that's 24 times its normal volume. Float listed around 8.3 million. Shell company category. Dilution data flagged high risk. So yeah, this is exactly the kind of name where the candle matters more than the headline. Oof, look at that wick action. Here at the markets desk, I want to see if buyers can keep accepting in the high 30s, because once a move this stretched starts printing lower highs, it can go from squeeze to air pocket fast. Fresh level for me now, 38.50 below. If that gives way on a heavy 1-minute candle, the tape is telling you supply showed up. If it keeps snapping back above that area, then shorts still don't have clean control. Howell next. And this one's hilarious in a totally different way. We're at basically $1, 1.01-ish, up 134%, and the volume is the whole story. 103 million shares already. That is monster tape for a biotech that normally does, 700,000 shares a day? So, the battleground is super clean, $1. Above $1, you can at least say buyers are still defending the psychological line. Under $1, this can turn into that classic penny stock fade, where everyone who chased the open starts bailing at the same doorway. I'm not calling it either way. I just want to see if the dips are getting bought, or if every pop into 1.05, 1.08 gets smacked back down. Now, June's, different price point, same small cap biotech energy. This is 8.76, up about 70%. And look at the relative volume. 237 times normal. That's not a casual scan hit. That's the whole room finding it at once. The read here is gap hold versus rejection in the high 8s. If this keeps basing above 8, that's a much healthier tape than a straight vertical wick. But if it keeps tapping the upper 8s and failing, you'll see momentum traders get impatient fast. Also, tiny market cap feel here. High dilution risk showing on the board. So I'm treating the candles more than the headline. For me, the clean spots are 8 as the gap hold area and high 8s as the rejection zone that has to stop rejecting before this gets cleaner. SUGP now. This is the microfloat squeeze check. And yeah, this one deserves respect, but also a little fear. We're at 3.78, up 36%, volume already over 20 million, and the float on the board is tiny, about 468,000 shares. That's the kind of setup where candles can look totally normal for 30 seconds, and then suddenly you get a nasty air pocket or a volatility halt, because there just isn't much stock moving around. The level I care about here is that 3.60 open area. If this keeps holding above 3.60, that tells you buyers are still defending the opening push. If it loses 3.60 and starts accepting under it, now the squeeze starts looking more like distribution than continuation. High dilution risk is on the board too, so don't treat this like a clean large cap breakout. This is a fast tape, tight float, high risk name. Flip it over to JZ on the loser side, because the downside volume matters too. This is down about 32%, trading 2.24-ish, and the relative volume is almost 25 times normal. So this isn't just some sleepy red print. The spot here is 2.28. That level is broken for now, and as long as it's living underneath 2.28, the bounce attempts are guilty until proven otherwise. If buyers can reclaim 2.28 and actually hold it, then okay, maybe you've got a little failed breakdown bounce brewing. But under it, that's still sellers pressing lower highs into a weak open. Different kind of momentum, same idea. Volume confirms the move, just to the downside this time. Last pass here, ADXN. Then I'll rapid fire the XRP ETFs and the downside names. ADXN is the sneaky one on the board. ADX CNS Biotech, 5.85-ish, up 28%. But the stat that jumps off the page is 592 times relative volume. That's not normal interest. That's a full event tape. On the 1 minute, I'm watching 570 as the line in the sand right now. If it keeps testing that area and buyers keep absorbing it, fine, that's churn with support. If it starts living below 570, that's where these microfloat biotech moves can go from orderly pullback to air pocket real quick. Now, quick ETF check. XXRP and UXRP both up about 23%. But remember, these are leveraged XRP products. Daily reset stuff, crypto-linked so the move can look clean on the board and still be very jumpy underneath. XXRP is the bigger dollar name at 33 and change. UXRP is around 16, lighter volume. I'm not reading relative volume too hard there pre-openish, because those ETF prints can be weird. And then losers. MMA, down about 19% at 46 cents. Under a buck, so spreads and liquidity matter. And ISPC down 17% at 1.88, but only 0.44 relative volume, so that one's not screaming liquidation the same way Jay-Z was. Alright, movers board is set. Small cap biotech, microfloat squeeze names, and a little crypto ETF heat. We'll hand it forward from here and get ready for the next block.
Alright, tiny timeout. Quick pro terminal lap, because this is the kit we're driving all morning. First up, Dilution Center. This is where the markets desk checks the boring stuff that saves you from getting smoked. Shelves, ATMs, offerings, warrant overhang. Especially with these small cap runners, the chart can look electric and then boom, filing risk hits the tape. This page doesn't tell you what to trade. It tells you what risk might be hiding under the candle. Now back to the movers board. This is the heartbeat. Top gainers, top losers. Price, percent move, relative volume, float when it's there, market cap when it's there. Look, RFAI up over 200%. Howl, still monster volume. JUNS and SUGP in the same high beta bucket. But the key, this is a research board, not a buy button. A mover is just a question. Why is it moving? Is the volume real? Is the float tight? Is the spread gross? Then, if a name catches your eye, you go deeper. I'm pulling up KNRX here just as the demo name. Filings tab first, because recent SEC filings can matter way more than the headline. Offering language, shelf registrations, corporate updates, all that stuff can change the risk profile fast. And then we flip insider activity. Same idea. You're not trying to magically predict the next candle. You're building context. Who filed what? When did it hit? And does the tape care? Sometimes data can be delayed, incomplete, or just not available on a tiny name. Cool. You don't force it. And then, of course, we land where we live. The 1 minute terminal chart. Oof, this is the part I care about. Candles, volume, wicks, levels, all on one screen. You can take the mover, check the dilution risk, scan the filings, and then come right back to the actual tape. That's the workflow. Educational only, obviously. No magic signals, no guaranteed moves, just cleaner research and faster context. If you want the same setup we're using on the show, it's ProTerminal. Sign up at proterminal.io. Alright, coming up, we're jumping right back into the mover scan.
Thanks, Markets Desk. Alright, the bell is live and the first few minutes are already giving us the plot. SPY's at 764.92, up 0.3. QQQ's 712.80, up about 0.25%. But here's the wrinkle. It already rejected that 716.70 ceiling the macro desk had on the board before the bell. So the Nasdaq is green, yeah, but it's not exactly doing a victory lap. IWM's the better tell so far, 299.30, up 0.55%, sniffing that big 300 round number. If small caps can keep leading, while VIX sits at 1895, just under 19, that's risk appetite trying to broaden. But breadth is mixed, so don't confuse a green open with a clean open. First movers out of the gate are wild. RFAI up about 260%. Howell up 123%, around 96 cents. June's up 58%. SUGP up 33%. And credit to the markets desk. That SUGP 360 line got tagged right after the bell. On the downside, JZ and NNA are still heavy. Opening bell tape. Exciting, loud, and slightly unhinged. Basically a trading floor espresso machine. Now here's the cross-asset read, because this is where the market tells you whether the stock move has a backbone or just a nice outfit. Bonds are not giving equities a totally clean green light. TLT's at 82.22, down 0.15%, and IEF's 92.97, basically flat but a little soft. That says rates are still a bit of a headwind, not a tailwind. The dollar is softer at 27.85, down 0.21%, while the yen is firmer at 57.84, up 0.32%. Even if you only trade US stocks, keep an eye on that dollar-yen pocket, because when FX starts wobbling, NASDAQ usually hears about it eventually. Gold is bid too, GLD 420.51, up 1.26%. That's the funny part of this open. VIX is under 19, crypto is screaming risk on, but gold still has an insurance bid. Oils contained, USO 135.02, up 0.36%, so no crude panic premium at the moment. And crypto risk is absolutely awake. BITO up 6.12%, coin up 5.06%, NSTR up almost 7%. So the story is not bearish, it's just layered. Stocks are green, crypto's partying, bonds are shrugging, and gold is sitting in the corner saying, I've seen this movie before. Okay, so the headline agenda from here is pretty simple. Healthcare's got a little pocket of strength. Keep mRNA and AMGN on the radar there. And Home Depot is a nice consumer gut check, because if the market wants the soft landing story, the home improvement names can't be totally dead. But the bigger pressure point is still rates, with Fed minutes hanging over the tape, so bond proxies matter. TLT and IEF are a little soft. Gold's firm. Oil's green but not exploding. That's a mixed macro board, not a clean risk-on party. Now on QQQ, this is the actual morning map. 715.50 is the reclaim level after that breakdown, and 716.70 is the high-end trigger if buyers really mean it. Underneath, it's still living closer to 713, so tech needs to prove it. IWM is the breadth tell. 300 is the big round number. If Russell can clear and hold 300 while QQQ reclaims, that's when the rally broadens. And VIX at 19, super important. Below 19 keeps things calm. Back above 19 and the tape gets jumpier fast. Last thing, 1:45 Eastern, PMI hits, so don't ignore that timestamp. That can move yields, and yields can move this whole board. All right, macro map is set. Coming up, let's flip over and hit the live movers board.
Thanks, Macro Desk. Movers board now, because this small cap tape is moving fast, and it is not clean. All right, look at the top of this thing. SPY is only up about 0.25%. QQQ barely green. IWM stronger. So when RFAI is sitting up 260%, that's not the market carrying it. That's its own auction. Howell still hanging around that $1 battleground after a monster volume spike. June's still in the high-volume biotech bucket. SUGP's still a tiny foot squeeze candidate. And quick scoreboard note, ADXN did tag that 570 area we flagged earlier. So yeah, Markets Desk gets one there, but now we care if it can actually hold bid. First chart is RFAI, biggest percentage move on the board. Okay, RFAI on the 1 minute. This is the one everybody's staring at. 45.86 last print on the board. Up 260%, a little over 1 million shares traded, 26 times relative volume. Oof, but context matters. This is a SPAC shell company, financial services, high dilution risk on the profile data, so I'm treating this like a pure momentum auction. not some clean fundamental re-rate. Here's the market's desk line. Mid-40s need to stay firm if bulls want this tape to keep looking orderly. If it starts living below 45, that tells me the bid is slipping. And the bigger trapdoor is still that 38.50 level we already had on the board. Below there on real volume, the squeeze tone changes fast. Above it, still wild, still tradable for some people, but very jumpy. This is exactly where you don't marry the candles. You read volume, you read wicks, you keep score. Now Howl. And yeah, this is the battleground name right here. We're talking 99 cents, basically pinned around that $1 line, up about 130% with 123 million shares already through it. That is not casual volume. That's 171 times normal volume. But here's the thing with these sub-$2 biotech runners. $1 is psychological. It's mechanical. It's where everybody sees the same line. If Howl can keep accepting above $1, fine. Momentum traders stay interested. But if it keeps tagging one and failing back under 98, 97 cents, that's where the penny stock fade risk shows up fast. I'm not chasing that candle blindly. I'm watching whether buyers defend the reclaim or if this turns into another heavy volume round trip.
Thanks, Markets Desk. Breaking macro wire. Treasury is doubling the long bond buyback plan. ProTerminal's newsroom is tracking the announcement now. Treasury says it will at least double planned buybacks of 10 to 30-year treasuries to $4 billion per operation. That's the long end. The stuff that feeds mortgage rates, corporate borrowing costs, discount rates, all the fun little ingredients that make equity traders suddenly learn bond math. What we know, this is aimed at easing pressure in the long end. What we don't know yet, whether this becomes durable relief or just a liquidity bandage on a market that's been demanding a higher term premium. Market reads so far. Dollar softer around 27.85 on UUP. Gold firm at 420.51, up about 1.3%. And TLT is still sitting near 82.22, slightly red on the live board. So the bond market is listening, but it is not exactly sending flowers. Next headline. This buyback move may complicate Fed policy. Here's the simple version from the macro desk. Treasury is trying to manage borrowing cost stress, while the Fed is still supposed to be managing inflation and financial conditions. Those are not the same job, even if they use the same highway. Why it matters for investors? If fiscal plumbing starts leaning against long yields at the same time markets are trying to price inflation risk, rate expectations get messier. You can see why equities like the relief angle. SPY is around 765, green by about 0.3, but the policy backdrop gets a little less clean. Relief rally? Yes. Clean macro signal? Not quite. More like the dashboard light turned from red to amber, and nobody can find the manual. And the bigger backdrop. Global bond rout warning signals are still flashing. ProTerminal is tracking long-term yields at multi-decade highs across major sovereign markets, the US, Japan, Germany, France. And that's the part that matters beyond today's headline. Higher long yields raise the price of time. Governments pay more, companies pay more, consumers feel it in mortgages and credit, and risk assets have to justify valuations against a tougher hurdle rate. That's why gold at 420.51 and the yen firmer around 57.84 makes sense as safety style tells, while oil near 135 is not the main fire this morning. Coming up, we'll hand it back toward the movers board, because the single name runners are loud, but today the long bond is the guy quietly moving all the furniture.
Thanks, Macro Desk. Let's bring that lens over to Apple earnings. And right away, this is why we start on the chart. Because the business story and the tape are not saying the exact same thing this morning. QQQ is green. The broader tape is holding up. But Apple's 1-minute chart is heavy. It opened around 311.91, tried to firm up near 312 and change, tagged a high around 312.70, and then boom, sellers hit it. The key intraday flush took it all the way down near 307.44, and right now it's trying to stabilize around 308. So here at the company desk, the first question is simple. Was the earnings print good enough to matter if the stock can't reclaim the breakdown zone? Okay, now let's pull up the actual earnings release because this wasn't a bad print on the surface, not even close. Apple reported fiscal third quarter revenue of $109.4 billion, up 16% year over year. Diluted EPS was $2.02, up 29%. Gross margin came in at 50.1%, and that is the big number. But there's a footnote. About 2 percentage points of that margin benefit came from tariff refunds. Same thing on EPS, about 11 cents of help from those refunds. So the story is not Apple missed. The story is how clean was the beat. That matters when the stock is carrying a roughly $4.55 trillion market cap and a PE around 42. Great company, yes. But at that multiple, the market wants clean acceleration, not just a nice quarter with some refund help layered in. And this is where the earnings story gets more interesting. The quarter still threw off a monster amount of cash. Operating cash flow was about $34.4 billion. Free cash flow about $31.9 billion. Net income was just under $29.8 billion. That is real operating power. But when we check the filings trail, the July 30th 8K is the earnings event. The July 31st 10Q is the follow-through document. And the newer filings are Form 4s. So there's no new Apple earnings event on today's calendar that we're reacting to. This is the market still digesting the last print, the margin quality, and the bigger question hanging over Apple. Can services, leasing, ecosystem stickiness, and product refreshes keep growth high enough for this valuation? Last piece here. The street is not all lined up in one direction. Jefferies downgraded Apple to underperform on August 10th. China Renaissance moved from buy to hold earlier in August. At the same time, names like Goldman, Morgan Stanley, Wells, and others maintained their ratings after the print. That split tells you the debate pretty cleanly. Bulls see cash flow, margin, installed base, and buyback-style durability. Skeptics are looking at the multiple and asking, what actually changes from here? So on the tape, I'd keep it very simple. Watch 308 as the intraday support check, and real repair only looks cleaner back above 312.40. Coming up, we'll kick it back toward the movers board and see where the opening drive momentum is rotating now.
Thanks, company desk. All right, markets desk back on the movers board, and this board is still spicy. The index tape is green but mixed. IWM's doing the better work. QQQ's just kind of hanging. And then you've got RFAI up 300+% on the top row. That's not normal strength, that's an auction. Howell still has monster share volume behind it. JIUN is holding a big biotech gain, and SUGP is still sitting in that tiny float momentum lane. So we're not doing a sleepy board read. We're going chart by chart. Top row first, then we'll separate real bid from opening drive noise. Let's pull RFAI first, because this is the cleanest headline number on the board and also the easiest one to get reckless with. Price is around $52.90, up about 315%, a little over 1 million shares traded versus a 38,000 average. That's the whole story right there. Massive dislocation, thin history, wide air pockets. On the 1 minute, I'm not treating this like a normal large cap trend. This is tape reading. The first sanity check for me is $50. If it's above 50, the auction is still elevated. If it loses 50 cleanly, oof. That's where these vertical movers can start getting slippery fast. Not a chase call, just the level. RFAI 50 is now the line I want on the board. Howell, next. And this one's just straight penny biotech chaos. We're around 95 cents, up about 120%. But look at the turnover. 138 million shares, almost 191 times normal volume. That is not quiet accumulation. That's the whole room piling into the same $1 magnet. So for me, the read is simple. Is the bid rebuilding under $1, or is this just distribution after the first rip? If it keeps failing into that $1 area, that's a totally different feel than cleanly reclaiming it and holding. Under 90 cents, I'd treat that as the tape telling you momentum is leaking. And yeah, high dilution risk biotech, penny name. This is exactly where you respect the level and don't get romantic with the story. Now, Juns. This is the other biotech burner, but it's a cleaner dollar price read. 850-ish right now, up about 65%. 28.7 million shares traded, and the relative volume number is ridiculous, almost 300 times normal. So the whole question here is the $8 area. If buyers keep defending 8 and the chart starts pressing back through 850, then you've got that rejection test set up toward the high 8s. But if every push gets smacked and it starts living under 8, that's when these runners can go from strong tape to air pocket really fast. I don't love chasing the middle of that range. I want to see who wins 8 first. Dip buyers or the sellers leaning on the pop. SUGP now. This is the tiny float squeeze profile, so totally different animal than the biotech names. We're around 385, up almost 39%, but the number that jumps off the page is that float, about 468,000 shares. That is nothing. So when 24 million shares trade, yeah, you can get these violent high $3 candles that look amazing for about 30 seconds, and then trap late chasers just as fast. For me, the clean read is simple. Can it keep accepting above that 380 area and actually pressure 4, or does it start rejecting every push and bleed back toward the mid-3s? Watch $4 above. That's the obvious squeeze line everyone can see. But if this loses 350 with speed, that's where the tiny float magic can turn into a trap real quick. Now, the XRP ETF pair. XXRP and UXRP, these are not regular stock stories, so don't treat them like they are. XXRP is around 3478, up about 29%. And UXRP is around 1681, basically the same move, both tied to leveraged XRP exposure. Crypto can move stupid fast, it's highly volatile, and it's still a totally different risk bucket than common stocks. Also notice the volume quality here. XXRP relative volume is only about 0.3, UXRP about 0.5, so the price move is big, but the tape isn't screaming the way Howl or Jums was. With leveraged crypto ETFs, the thing I'm watching is whether the 1-minute trend stays orderly or starts gapping around, because these products are designed around daily leverage. They can get weird if the underlying XRP tape starts whipping. Alright, Bivy and Tron now. This is the follow-through check, because not every green name on this board is the same kind of move. Bivy's the one with the actual juice behind it, around 232, up 25%, but the bigger number is 11.7 million shares traded versus about 103,000 average. That's 114 times relative volume. So yeah, that's real attention. Small biotech, roughly 7 million float, high dilution risk on the profile. So I'm not treating this like some clean long-term story. This is tape, volume, and levels. For me, 250 is the obvious upside line people are going to stare at. And if it starts losing that 225 zone, the momentum crowd can disappear fast. Now compare that with Tron. Similar price, around 231, similar percent move, up about 24%, but only 3.4 times relative volume. That's follow-through. But it's not the same crowd explosion as Bivy. Bigger float too, 92 million plus, so the squeeze profile is just not as tight. Last pass. Let's check the tail of the board, because this is where people get smoked chasing the wrong thing. Jay-Z is the downside name, around 253, down almost 24%, but the volume is actually loud, 465,000 shares versus about 12,000 average, so 36 times relative volume. Tiny float, high dilution risk, and that means rebound risk is real too. When these China education names get hit this hard, they can keep bleeding, or they can snap back violently on almost nothing. 250 is the line I'd keep on the screen. Below it, sellers still have control. Reclaiming it and holding would at least tell you the panic is slowing. And then Hawks, this is the weird one. It's a 2 times daily hood ETF, up almost 24%, but only 19,000 shares traded, relative volume 0.07. So that headline move looks huge, but the product is thin today. Leveraged ETF, low volume, tracking mechanics, just don't read that like a normal stock breakout. Alright, that's the opening drive movers heat check. We've got the biggest rippers, the weird ETFs, and the downside tail mapped out. So let's roll straight into the next tape hit. Alright, let's hit MSFT real quick. Daily chart first, because this is the mega cap tell right now. QQQ's barely green, Market's mixed, and Microsoft is only at the hair, around the low 480s. Bigger picture? Still an uptrend. This thing ran from the high 300s into that 513 area, so yeah, the trend was real. But look at the last couple weeks. Lower highs, lower lows, little fade/round trip action. Not a breakdown disaster, but it's not leadership today either. Here at the Markets Desk, I'm scoring 478.50 as the daily support shelf, and 484.60 as the first spot it has to reclaim before the chart looks cleaner. Now drop it to the 1 minute. Oof, look at that wick. Opened around 482, flushed under 480, printed about 479.85, and that drop actually had volume behind it. Then buyers snapped it right back toward 484.50, so that was not a clean one-way dump. But here's the problem. The bounce faded into a base, and now it's hanging around 481-ish, closer to the low than the high. So the range is super clean, below 480, and the morning low is back in play. Above 484.50, then MSFT repairs the opening damage. Until then, it's chop inside the box. Coming up, we'll flip back into the movers board and see where the real heat is. Alright, back to the movers board. Markets Desk wants the live freak show now, not the mega cap grind. Look at this board. SPY's green, IWM's got the better bid, QQQ basically flat, VIX under 19. So yeah, risk is alive. But it's not like the whole market is melting up. That matters. RFAI still sitting on top, almost a 294% move at about $50. Howell is still a monster biotech volume name, up over 110%. Jun's still hanging in that high relative volume healthcare lane, up about 55%. But I don't want to just repeat the same three names for sport. We're going to check the top, then I want fresh eyes on JATT, SDOT, and Hodu, because those are the ones the board is starting to make us compare against the earlier momentum names. Let's pop RFAI first, because this is still the board leader, and it's not a normal equity tape. Shell company profile, financial services bucket, about 1.3 million shares traded versus a tiny average volume base, so the relative volume print is legit at 34 times. But here's the catch. It's up almost 300%, and ProTerminal is showing high dilution risk. So for me, this is a liquidity auction chart, not a clean fundamentals chart. I'm not chasing headlines here. I'm watching whether buyers keep accepting this elevated range or whether the bid just disappears. If the 1 minute starts stacking lower highs, that's where these SPAC-style runners can go from clean to ugly really fast. Good tape if it's holding, dangerous tape if it starts slipping. Howells, the cleaner biotech momentum check here. I'm not going to beat the same $1 magnet to death. The question now is way more basic. After that monster burst, is the bid actually stabilizing? Or is this just churn? You've got 91 cents on the tape, up about 111%, and the volume is just absurd. 152 million shares, 210 times average. So for me, the first read is, can it keep building above that 90-cent area without every pop getting slammed? If 90 cents starts failing cleanly, that's where this goes from momentum continuation to, all right, late buyers are getting tested. And remember, small cap biotech, high dilution risk on the board, respect the tape, don't marry the headline. Now, Jun's, same healthcare bucket, totally different price zone. This one's sitting right around $8, up about 55%. And the relative volume is even crazier on paper, 311 times normal on 30 million shares. So the follow-through check here is whether the move is tightening near 8, or whether that earlier spike is starting to fade into lower highs. I like using the whole dollar area as the quick sanity line on names like this, not as a magic number, just because traders all see it. If 8 keeps holding and the candles stop giving back the pushes, okay, the move's still controlled. If it starts living below 8, and volume dries up, that's the tell that the spike may be losing sponsorship. JAT is next. And this is exactly why you can't just sort by percent gain and assume everything is the same trade. Yeah, it's up about 52%, $20 and change on the print. But look at the volume profile here. Only about 35,000 shares, and relative volume is just 1.2 times. That is a completely different animal than Howell doing 200 times relative volume, or Jun's doing 300 times. JAT is another shell company style name, so the candle can look dramatic because there just isn't that much stock trading. For me, the tell is the 21 area. If it's actually building above there, okay, maybe the thin tape keeps squeezing. If it keeps poking over and failing, then this is more of a gap print name and a real momentum leader. Now, back to SUGP for just a quick momentum check, because this one's not new to the desk. We already hit the tiny float setup earlier. What matters now is whether that squeeze is still acting healthy or whether it's starting to leak. Price is around $379, still up 36%, and the tape is still loud. 26.8 million shares, 154 times relative volume. So the participation is real, but that also means the exits can get nasty if the 1 minute starts rolling over. I'm watching the $4 area as the obvious line in the sand, psychologically. Clean pushes through it, keep the squeeze conversation alive. Repeated failures under it tell you the crowd may be losing control. With names like this, VWAP and the last 1 minute higher low matter more than the story.
Thanks. Markets Desk. Breaking macro wire here. ProTerminal's newsroom is tracking BOE's Hartnett warning that if Treasury's effort to keep the long end pinned fails, specifically that 30-year yield staying under 5%, the risk is a weaker dollar and a broader risk-off wave. What we know? The concern is not just bonds, it's the knock-on. Dollar down, gold bid, and a rotation away from AI and cyclicals if long rates start bullying the tape again. What we don't know yet, whether the Treasury push actually holds, how much follow-through there is in the long bond, or whether equities treat this as background noise after the open. Right now, the market is not panicking. SPY around 764.8, QQQ basically flat, VIX just under 19. But gold is firm. GLD around 420.9, up about 1.35%. That's the macro desk's little smoke alarm blinking in the corner. Next headline. Citi is still overweight equities and is leaning into the classic pre-midterm pullback playbook. Their view is buy weakness, assuming policy efforts keep long-term yields from turning into a furniture fire. Important distinction. That's Citi's strategy call, not us telling anyone to chase a green candle. Why it matters is the split screen. Hartnett is saying, hey, if the bond cap fails, risk can unwind fast. Citi is saying, if yields stabilize, dips can still find sponsorship. And that lines up with this tape so far. Small caps are firmer. IWM near 299.6 and up about 0.6%, while QQQ is only hanging around flat. So yeah, the bond market is once again holding the remote control. And the China data point to keep on the macro board. Industrial production slowed in July, rising 4.5% year over year and missing expectations, with the strength mainly coming from external demand rather than domestic consumption. That matters for global cyclicals, commodities, and any multinational with China sensitivity, because export strength can paper over weak local demand for a while, but it doesn't magically fix the consumer. Oil is up slightly, around 135. So energy is not trading like a full demand scare right this second, but the China growth pulse is still soft. Coming up, we'll hand it back toward the movers board, because these macro waves are exactly why the single name tape can get weird fast.
Thanks, Macro Desk. Quick tool check while the tape settles. This board right here, this is ProTerminal's Market Movers. This is what the Markets Desk is using all morning to catch the weird stuff fast. Top gainers, losers, price, relative volume, the whole first pass scan. And key point, this is not a buy list. It's a research board. If something's up 80, 100, 200%, the first question is not, how do I chase it? The first question is, why is it moving? How much volume is real? And where's the risk? Now watch the risk side. Oof. This is the page I want people checking before they get mesmerized by a green candle. The dilution center. Shelves, ATMs, offerings, registration statements, all the stuff that can matter a ton in smaller names. A chart can look awesome for 5 minutes, and then one filing changes the whole risk profile. So yeah, use the movers for the alert, but use dilution and filings to figure out what you're actually looking at. Data can be incomplete or delayed sometimes, so you still read the source docs, but this gets you to the right questions way faster. Thanks, Markets Desk. Let's bring it over to the Stock Whisperer paper book for a clean risk check. This is the show's simulated paper trading portfolio. So we're not copying trades, we're grading process. Right now the tape is modestly constructive. SPY green, IWM leading a bit, QQQ flat, but breadth is mixed, and that matters. I don't have a clean new trigger here, so this is a hold and review session, not an execution session. Start with AMZN. We're long 35 shares from 261.72. Current mark is 259.32. So that's down about $84, roughly 0.9%. Not a disaster, but it's not acting strong either. The original thesis was that strategic prime video expansion headline into Latin America could keep a bid under the name. So far it's soft, not broken. The line for me is 255.80. If AMZN loses 255.80, the paper trade thesis has failed and the defined risk takes over. Above that, I don't need to force anything. mRNA is the clean winner in the book. Long 25 shares, average price $138.0, current mark around $149.81. That's plus $295, plus 8.5%. This was the Phase 3 data momentum trade, and earlier we protected it because the opening momentum actually confirmed. Here's the thing, with a winner like this, I don't want to turn it into a victory lap. The bracket is there for a reason. If momentum keeps holding, great. But if the tape starts rejecting the gap, the paper account already has risk defined. SOXX is the hedge piece. We're short 15 shares from 522.99. Current mark, 520.95. So that's up about $30, just under 0.4%. Small win, but it's doing its job. The reason this trade exists is not because the whole market is falling apart. It's not. The reason is the chip tape has been weaker than the index tape, and the headlines earlier were about rotation out of AI hardware. QQQ flat with semis heavy is exactly the kind of divergence I want to respect. But again, no adding unless the setup improves. XLRE is the quiet one, and honestly, quiet is fine. Long 200 shares from 44.95. Current mark, 45.22. Plus about $54, up 0.6%. This is not supposed to be the exciting position. It's there because when breadth is mixed and rates are the big macro debate, real estate can give you a different kind of exposure than chasing the hottest small cap runner. It's a small green bracketed paper position, and I don't need to overmanage it. Now the watch list, and this is the important part. No new trade unless the level actually triggers. NVDA is the leadership reclaim. I need to see 220 reclaim before I even think about adding long exposure to the paper book. If NVDA can't clear 220, then Megacap Tech still isn't giving me the green light. On the other side, AMZN below 255.80 is the failure line. That's where the long thesis stops being soft but alive and becomes wrong. So the plan is simple. NVDA above 220 gets my attention. AMZN below 255.80 gets risk reduced by the bracket. Until then, the best trade is no new trade. So, net here at the Stock Whisperer. mRNA is paying us. SOXX and XLRE are small green. AMZN is the only problem child, but still above the defined line. No live paper order from me right now. I want confirmation, not activity for activity's sake. Coming up, the macro report has that release window set up, and that could matter for these brackets if yields start moving again.
Thanks, Stock Whisperer. All right, Macro Desk taking the wheel for the wide-angle shot. This is not a panic tape, but it's not exactly a spa day either. SPY's around 765.2, up 0.35%. QQQ 711.6, barely green by 0.09%. And IWN is the better actor here at 299.3, up 0.55%. VIX is down at 18.93, off 1.35%. So the fear gauge is cooling, but breadth is still mixed. That's the market saying, yeah, I'm fine, while aggressively not making eye contact. Underneath it, bonds are not giving stocks a full green light. TLT at 82.19 is down 0.18%. IEF at 92.92 is down 0.09%. So Treasury prices are a touch lower, and yields have a little upward lean. The 30-year yield pressure theme the macro desk flagged earlier still matters, but right now the tape is treating it like a simmer, not a fire alarm. For the index tape, SPY 764.40 is the first stress line I care about here. If that cracks, the soft VIX reading matters a lot less. Now, the interesting part is away from the equity screen. Dollar proxy is basically flat to soft at 27.895, down 0.05%. Yen proxy is a little firmer at 57.77, up 0.19%, and GLD is the standout at 420.36, up 1.23%. That fits the headline stack. Weaker dollar, Treasury buyback support, and gold still catching a bid. But oil is not confirming some big commodity panic. USO's 134.33, down 0.16%. So this isn't a simple everything inflationary is ripping story. It's more like rates are still annoying. The dollar is a little soggy. Gold likes that combo, and equities are trying to look past it as long as yields don't start kicking the furniture. Then crypto is doing its own thing. BITO up 6.13%. Coin up 9.8%. MSTR up 5.49%. That corner is highly volatile and still a very different risk box, but when crypto proxies are green like that, while VIX is lower and small caps are leading, it tells you liquidity appetite is alive. Not roaring, alive. The next real macro fuse is 1:45 p.m. Eastern. S&P Global PMIs, with composite estimated 53.2. Services 54, manufacturing 53.9. That's the afternoon checkpoint for the growth story. Okay, next timestamp on the macro clock is 1:45 Eastern, flash PMI. That's the split screen read, composite, services, manufacturing, each one versus its estimate. I don't have the exact consensus table printed in this feed, so I'm not going to fake the decimals, but the market reaction is the point. A broad beat says growth still has a pulse, and that can feed right into rates, the dollar, gold, and the tech trade. Hot services usually matters more for the rates conversation. Manufacturing is more of the cyclical pulse check. And look at the setup into it. Dollar proxy is sitting right near 27.90. Gold is still firm around 420. QQQ is only barely green, so growth good can turn into rate bad pretty quickly if yields start leaning higher. For SPY, keep it simple. 764.40 is the floor from the intraday tape. 765.50 is the reclaim. IWM 300 is the clean small cap line. VIX is still below 19, but that 19 to 20 zone is the radar. And GLD holding around 420 tells you there's still demand for safety, even with equities green. And don't forget the open US 30-year 5% callout. If the long end starts pushing back toward that line, the whole afternoon can feel different fast. All right, Macro Desk is going to leave it there. Handing it back to the tape, let's see which single names are actually responding.
Thanks. Macro Desk. Markets Desk grabbing the movers board, because this tape is green enough for risk, but mixed enough that volume actually matters. SPY is up about 0.4. QQQ, barely green. IWM's the better index, up 0.5%. VIX under 19. So yeah, small cap risk pockets are alive. But don't just chase the biggest green number. Top row is still RFAI, up 328%, 40 times relative volume, and that below 50 flush we flagged earlier already hit. Scoreboard got that one. Howell is the one I want next. 90-cent biotech up 109%, 168 million shares, 233 times relative volume. Oof. Then Juns, still loud, up 86%, 33 million shares, 347 times relative volume. SDOT's up 51, but only 1.5 times relative volume. Totally different read. Board first, then Howell chart now. Alright, Howell on the 1 minute. This is the clean participation name on the board right now. Average volume is about 723,000 shares, and it's already done 168 million by 1011. That's not casual interest. That's the entire tape crowd leaning on it. Price is around 90 cents, it's biotech, and the board has high dilution risk on it. So here at the markets desk, I'm treating every green push like it has to prove itself. The simple line, 90 cents, needs to keep acting like support, not just a print. The magnet above is $1. These sub-dollar runners love that big round number, but they also love rejecting there. So watch $1 above and watch 85 cents below. If it stuffs near $1 and then loses 85, that's supply taking over. If it keeps absorbing and volume expands on the push, then the momentum is still real. No hero candle chasing. Make the tape prove it. Now, Juns is the one I want to revisit, because this is the high R-vol spike that can look amazing on the board and still be super binary on the tape. It's around 965, up about 87%, and the relative volume is just wild. Roughly 348 times normal on 33 million plus shares versus an average under 100,000. So the only thing I care about here right now is $10. If Juns can actually accept above 10, not just wick it, not just tag it for 5 seconds, then you've got momentum traders still involved. But if every push into 10 gets sold, that's rejection. And then the pullback can get sharp because late buyers are all staring at the same line. This is biotech, high dilution risk on the board, so respect the chart, don't marry the story. And then RFAI. Okay, this is technically the top percentage gainer, up more than 300%, sitting in the mid-50s. But this is not the same kind of read as Howell or even Junes. This is a shell company name, financial services, tiny-ish float dynamics, and the volume is only about 1.55 million shares. Relative volume is big, about 41 times normal, but the tape here can trade like a liquidity auction. So I'm not treating the green number as clean sponsorship. I'm watching that prior 50 area. Reclaim and hold above 50, buyers are defending the auction. Lose 50 and fail to get it back, and suddenly that whole move can feel a lot thinner than the percentage gain suggests. SUGP now. This is the tiny float industrials runner, and this is why it's on the board even though it's not the biggest percentage move. Price is around 3.85, up about 39%, but look at the participation. 27.4 million shares versus average volume around 173,000. That's 158 times relative volume on a float listed under 500,000 shares. So yeah, this thing can move fast both ways. The clean line for me is that $4 area. If buyers keep stuffing it into 4 and it can't actually accept above it, that's where these tiny float names can snap back hard. If it reclaims 4 with volume, different tape. But right now, I'm treating 4 as pressure, not a victory lap. And quick filing caution here too. SUGP does have recent filings, and the dilution risk is marked high. So don't separate the chart from the cap structure risk on a name like this. Flipping to the red side, JZ. This is the loser board check. And remember that 250 breakdown we were talking about earlier? That got hit. And now the stock's sitting around 227, down roughly 32% on 51 times relative volume. So the question is pretty simple. Is this a dead cat bounce trying to form, or is the offer still just sitting on every pop? On the 1 minute, I want to see how it behaves if it bounces back toward 250 from underneath. If 250 turns into the ceiling, that's classic breakdown behavior. If it starts reclaiming and holding above that, then at least the panic selling cools off a bit. But until then, this is still a damaged chart with high volume on the downside. Last pass here, S. and CANG, because this is the contrast that matters on a green movers board. S. is up about 51%, price sitting around $12.75, but relative volume is only 1.5 times. So yeah, big percent move, but compared with Howell or Juns, this is not the same crowd participation. If S. can actually keep building above that 13 area, fine, then the tape gets more interesting. But if it just chops around under there, that's not the same kind of sponsored move. Now Kang, this is the bigger warning label, up almost 30%, around 210, but relative volume is only 0.23. That's below normal volume, not above it. So that can show up green on the board and still be a thin move, a marked up move, whatever you want to call it, just not the same quality as a real volume breakout. And then quick ETF sweep, GEMG, Hodu, hooks. These are leveraged wrappers, so don't treat them like normal common stock movers. GEMG's up 31% on about 2x relative volume. Hodu is the one with actual better participation, almost 9x relative volume. And hooks is up big too, but only 0.14 relative volume, so thinner tape there. Leverage products can move fast, reset daily, and gaps can be nasty. So that's the board. Strongest sponsorship was Howell and Juns. Sketchier volume on Kang and hooks, and we'll keep the callouts live. Alright, movers board is set, let's hand it forward and see what headline hits next.
Thanks, Markets Desk. Let's swing this into the AI infrastructure chain. And look, the tape is not giving tech a free pass right now. SPY's green, IWM's green, QQQ is a little red, breadth is mixed. So when Broadcom is still green here, around 365, up about 0.5%, that's not some everything rips market. That's a company-specific bid. Here at the company desk, the question is simple. Does this AI build-out actually change Broadcom's earnings power, or is the market just paying up for the story again? Okay, now the Broadcom story has two pieces. First, you've got the headline that Broadcom is targeting more than $60 billion of debt financing tied to AI initiatives. That is a big, deliberate capital allocation move. Second, this isn't happening in a vacuum. The release stack already had that OpenAI Broadcom intelligence processor announcement back in June, plus the VMware private cloud angle sitting underneath the software side. So the bullish read is, they're building the rails for custom AI compute and enterprise private AI. The skeptical read is, $60 billion of debt means execution has to be clean. If AVGO starts losing 365 on this 1-minute tape, that would tell me the market is starting to care more about leverage than AI optionality.
Thanks, Markets Desk. Breaking biotech headline first. Howell is the wire right now. ProTerminal's newsroom is tracking Werewolf Therapeutics and Ambrose Therapeutics announcing an all-stock merger agreement, plus a concurrent oversubscribed $150 million private placement to support the combined company. What we know? All-stock deal, fresh financing, and the combined focus is conditionally activated therapeutics. What we don't know from this card yet, the detailed post-close ownership split, the full financing investor mix, or updated clinical timeline specifics. Market read, Howell is around 92 cents, up about 114%, with relative volume over 246 times. That's happening while SPY is only up 0.25% and QQQ is red, so this is not the index carrying it. This is event-driven biotech appetite. Here at the macro desk, the translation is simple. Cash runway matters, but in biotech, the lab still gets the final vote. Markets rent confidence by the hour. The clean optics line now is $1. Below it, still very messy. Above it, the tape starts treating this like a different conversation. Next card, Jupiter Neurosciences. The headline here is Juns jumping after partner PharmAla Biotech updates, including a newly granted U.S. patent. The stock's around $9.10, up about 76%, and relative volume is north of 400 times. So yeah, traders found this one. Why it matters? Patent news can tighten the story around intellectual property and pipeline optionality, especially in CNS and Parkinson's-related therapies. But the important distinction, this is not the same thing as a late-stage approval or commercial revenue in the data we have. It's sentiment, IP, and optionality. That $9 line is the quick scoreboard for the momentum crowd. Lose that, and the tourists tend to discover they had somewhere else to be. Last one for this brief. Microsoft's AI spending is back under the microscope. The number on the card is huge. $115.9 billion spent on AI. And the market question is what shareholders are getting for that bill, especially with the stock recently pulling back, while the company also moved through an ex-dividend moment with a higher payout. Why it matters beyond MSFT? This is the AI CapEx debate in one ticker. If spending keeps scaling, vendors and infrastructure names stay in the conversation. But margins, cash conversion, and return on investment get questioned harder. QQQ is sitting around 709.3 and red on the day. VIX is around 19, gold still above 420. Not panic, but definitely a market asking for receipts. Coming up, Market Movers gets this right back to the tape.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. Tape is mixed. SPY green, QQQ a little red, IWM firm, VIX under 19. So yeah, small cap momentum can still work, but we're not just chasing green candles blindly. Top row, RFAI, up 256%, trading around 45 bucks, 43 times relative volume. Big move, big risk, shell company setup. Then Howl, still a monster board name, 90 cents, up 109%, 179 million shares, 248 times relative volume. June's is loud too, up 84%, and that relative volume is 406 times. That's not quiet. Dot is green, up 58%, but only 3 times relative volume. Totally different read. So the job here is simple. Who has real participation? Who's just wearing a green jersey? First chart up. Okay, RFAI on the 1 minute. This is the spicy one. 45.32, up 256%. 1.66 million shares traded against a normal day around 38,000. That is serious volume expansion. But don't confuse serious volume with clean risk. This is a shell company name, float around 8.3 million, dilution risk marked high, and that earlier upper zone has not turned into clean acceptance. So here at the Markets Desk, I'm reading this as a volatility auction, not a victory lap. If it can reclaim 46 and actually hold there, buyers are trying to defend the upper range again. If it loses 45 and starts living below it, that's the fade tell. Watch the whole dollars. Oof, names like this can wick hard. One ugly minute can change the whole read. Now, Howl. This is the biotech runner sitting right around 90 cents, up about 109%, and the volume is just wild, almost 180 million shares against a normal day around 723,000. So yeah, chat, this is not a sleepy move. The obvious magnet is $1, right? Every penny runner that gets this kind of attention starts getting that psychological level on the tape. But I don't want to pretend the risk disappears because it's green. High dilution risk is tagged here, healthcare biotech, and if this starts losing the 85-cent area, that's where the character can change fast. Above $1 with volume, totally different look. Under 85, you've got to respect the fade risk. June's next. And this one's a different kind of ridiculous. 949 on the print, up 84%, but the relative volume is the headline. 406 times normal volume. That is a crowd. Now the level is clean. $10. I don't care about one click wick through 10. I want to see if it can actually accept there, hold bids, and keep volume following it. If it pops 10 and immediately gets stuffed back under, that's the rejection tell. If it bases under 10 and keeps grinding, then the tape is still interested. Small biotech, high dilution risk tag again. So this is momentum confirmation versus rug pull territory, not something to get married to. S dot now, and this is where the tone changes a little bit. Yeah, it's green, it's a big headline move. 1335, up about 58%. But look at the participation versus the other names we just hit. 2.2 million shares, only about 3 times relative volume. So it's moving, but it's not Howl volume, it's not Jun's volume. This one's got that earnings result backdrop, so the market's reacting to something real on the tape. But for me, the clean read is 13 bucks. Above 13, buyers are still hanging around and the move has structure. If it starts living back underneath 13, then it's less of a breakout and more of a gap and fade candidate. Not calling it either way. Just that 13 line is the lie detector here. SUGP next. This one is classic tiny flow chaos. 352 on the print, up 27%. But the volume is the whole story. 28 million shares traded against a normal day around 173,000. That's 162 times relative volume. Float shown under 500,000 shares. So when the crowd piles into something this thin, the candles can get stupid fast in both directions. And there's high dilution risk here, plus recent filings. So don't treat this like a clean large cap breakout. The pressure point is still 4 bucks. Until SUGP can actually reclaim 4 and hold it, that level is supply, not victory. Under it, you can get these nasty lower high pops where it looks alive for 3 minutes and then just gets smacked again. All right, last one on the chart side, JZ, and this is the red name check. 223-ish, down about 33%, but look, the volume is not dead at all. 682,000 shares, about 54 times normal. So this is why I still care about it even though it's a loser. The level for me is that 250 underside. If Jay-Z can't reclaim 250, any pop is still just a dead cat bounce into supply. If it does get back above there and actually holds, then okay, the tape changes a little bit. But right now, below 250, sellers are still in control. Quick sweep back on the board before we hand it off. MRNX and XXRP, just be careful mentally tagging those as stocks. Those are leveraged ETF products. Daily reset, path dependent, different animal. MRNX is up 33%, XXRP up 27%, but that's not the same read as a clean operating company breakout. EMAT, decent participation, up 28% with a little over 1 million shares and 2 times relative volume. Kang is green too, up about 27%, but relative volume is only 0.66, so that's more of a participation check. Not the same fire hose we saw in Howl or SUGP. Good movers board, spicy, but definitely not one to chase blindly.
Thanks, Markets Desk. Quick paperbook check here at the Stock Whisperer. This is the show's simulated paper trading portfolio, so I'm not asking anybody to copy this. I'm just grading the book live. Thesis, level, defined risk. Cash is sitting right around 59,981. An open unrealized P&L is about plus 443. The clean leader is still mRNA, long 25 shares from 138 even, trading 154.78, up about 419 bucks, a little over 12%. That's the trade doing the work. AMZN is the weak one, long 35 from 261.72, now 25.90.80, down about 67 bucks. So right away, the book is telling me one thing. Don't add exposure just because the tape is mixed. SPY's green, QQQ's basically flat to red. Breadth is mixed. That's not a chase environment for this desk. Thanks, Markets Desk. Quick check-in here at the Stock Whisperer, and this is the simulated paper book for the broadcast. I just opened BABA short, 60 shares, average 120.985, and it's basically flat right now at 120.99, down 30 cents on the position. The thesis is pretty simple. Pro-terminal flagged Alibaba profit plunging 75%, and if institutions sell the post-news bounce instead of defending it, this can stay heavy even with SPY green and QQQ basically flat. This is not a chase, it's a rejection zone trade. Risk is defined above 124.80, and the first downside confirmation I'm watching is 118.50 below. On the orders tab, here's the BABA bracket. Buy to cover limit at 114.20 if the downside follows through. Buy stop at 124.80 if that rejection idea fails. That's the whole trade. Thesis, level, defined risk, no hero stuff. Quick book check. AMZN long 35 from 261.72, now 259.69, down about 71 bucks. That's still the weak link. SOXX short 15 from 522.99, now 520.52, up 37. Chip weakness still fits. XLRE long 200 from 44.9515, now 45.22, up 53.70. Boring defensive ballast, but it's doing its job. The other brackets stay live. I'm not moving anything on this check. For BABA, 118.50 is the proof level.
Thanks, Stock Whisperer. All right, Markets Desk is back on the movers board. And look, the tape is not doing anything crazy. SPY up 0.25%. QQQ basically flat. IWM green. VIX back under 19. So these board moves, that's not index beta. That's single name chaos. RFAI still sitting at 47.31, up about 272%. Howl at 91 cents, up 111%. June's 946, up 83%. SDOT 1539, up 82%. The filter right now is participation. June's is showing 426 times relative volume. Howl 258 times. RFAI 45 times. SDOT's moving, but only 5.3 times relative volume. Different kind of engine. We're going chart by chart here. No wasted words. Board first, tape second. Levels matter. First chart is RFAI, because this is still the loudest thing on the board. 1 minute up. Price 47.31, up 271.6%. 1.74 million shares traded, 45 times relative volume. Small float, shell company profile, and ProTerminal's dilution risk tag is high. So yeah, this can move like a video game. but it can also trap late momentum fast. We already saw that 50 area matter earlier. It crossed, then couldn't keep clean control. So for the markets desk, the scoreboard is simple. Above 50, it starts to rebuild the momentum case. Below 45, I start treating that as crowd unwind risk. In between, it's chop with a giant spread of emotion around it. I want volume above the key levels, not just another pop that gets sold right back down. Not chasing the headline percent move, reading whether buyers can actually hold the line. Now, Howl is the one where I want everybody to slow it down a little bit. Because yeah, this thing is up 111%, but it's also a 91-cent stock. Under $1, the candles get nasty. The spread can open up, liquidity can vanish for a second. And the same volume that makes it look clean can turn into a trap real fast. That said, participation is ridiculous here. 186 million shares, roughly 258 times normal volume. So this isn't some quiet little drift. The battleground is that 91-cent area right now. If it keeps accepting above 91, buyers are still leaning on it. If it starts rejecting there and curling back under, that's where I'd expect people to get a lot less patient. June's next. And I'm not going to rehash the headline again, because we already did the catalyst. This is purely the 1-minute tape now. Price is sitting around $9.46, up 83%. And the crazy part is the sponsorship. 41 million shares, more than 426 times its average volume. So the question is simple. Do buyers still own the mid-nines, or is this just late chase rotation? For me, mid-9 control means it keeps basing instead of making lower highs every bounce. If it can keep reclaiming 950, that's buyers still showing up. If 940 starts acting like a ceiling instead of a floor, then the move is still huge, but control is shifting back towards supply. S.now, and this is where the quality check matters. It's up 82% at 1539, so yeah, big move, but the participation is not the same monster tape we just saw in Howl or June's. Volume's about 3.8 million, relative volume 5.3 times. That's active, don't get me wrong, but it's not 200 times, 400 times insanity. So around these mid-15s, I'm watching whether buyers are actually absorbing stock, or if this is just thin continuation where a couple prints can yank it around. For me, 15 is the clean line on the screen. Above it, the move still has some structure. Lose that, and you can see how fast a name like this starts looking heavy. Now, flip it to the red side. JZ. This one's down 32.5%, 224. And the weird part is, it's still doing 55 times relative volume. So this is not some dead name drifting lower on no interest. There's real activity, it's just activity into weakness. The bounce attempt here has to prove it can stop supply from coming right back in. If it can't get back over that 230 area and actually hold there, I'd treat the bounce as suspect. And if 220 starts slipping, that's the spot where the loser tape can accelerate again, because traders who bought the first bounce usually start bailing pretty quickly. Last pass here. Can first, because this is the cheap crypto-adjacent hardware name on the board. Canaan, Bitcoin mining machines, 36-cent stock, up 30%, and it's doing 47 million shares. But here's the important part. Relative volume is only 1.24. So yeah, the percent move looks loud, but compared with Howl doing 250 plus times normal volume, this is way less sponsorship. I'm not saying ignore it. Just don't confuse a cheap stock popping 30% with the same kind of panic volume event we saw at the top of the board. Quick cleanup rotation now. Kang 210, up basically 30%, but volume is under average on the data we have, 0.78 relative volume, so that's participation light. mRNX is not a regular company read. That's a daily target 2x long mRNA ETF, so that 39% move is product structure plus underlying leverage, not a normal equity catalyst. CRMU, same idea. 2 times long CRML daily ETF, up 29% on 158,000 shares. So thin product. Be careful reading it like a stock. And XXRP, 2 times long daily XRP ETF, up 27%, but relative volume only 0.46. Leveraged single-day ETFs can move fast and reset daily, so for me, that's a structure note, not a clean signal on the whole market. So the board's still telling us the same thing. Headline runners at the top, a few cheap sympathy-style moves underneath, and then some leveraged ETF noise mixed in. We'll leave the movers board there. Coming up next, let's get into the news side and see what's actually driving the tape.
All right, quick pit stop. This whole board we're ripping through here at the markets desk. The movers, the charts, the filings, the dilution checks, that's ProTerminal. First thing I care about on small caps, dilution. Oof, this page matters. Shelves, ATMs, offerings. Not sexy, but this is the stuff that can wreck a clean-looking chart if you ignore it. Now back to the engine room. Market movers. This is how we find what's actually moving right now. Not a buy signal, not a hype list. It's a research starting point. Price, percent move, relative volume when we have it, market cap, sector, all the context in one spot. Market's mixed right now. SPY green, QQQ basically flat, VIX under 19. So when something is up huge on this board, it stands out fast. And then you click into a name. We'll use Juns just as the example. And this is where the homework happens. I want the filings tab. I want to know if there's a shelf, a registration, an offering risk, anything fresh that changes the float story. Then I'll flip insider data too. Again, it's not telling you what to do. It's giving you the receipts, so you're not trading blind off a candle and a chat room headline.
Thanks, Markets Desk. Breaking macro wire here. Treasury Secretary Bessent is doubling buybacks of long-term U.S. debt. ProTerminal's newsroom is tracking that Treasury will lift repurchases of 10, 20, and 30-year Treasuries from $2 billion to at least $4 billion per operation. What we know, this is aimed at tempering rising yields and stabilizing borrowing costs, especially out on the long end, where the market's been doing its best impression of a smoke alarm. What we don't know yet, whether this actually changes the clearing price for duration, or whether it's just technical support while inflation fears keep doing the steering. The market read right now is not a victory lap. TLT is around 82.2012, down 0.27%. IEF around 92.89, down 0.12%. Equities are taking it better. SPY near 764.5, up 0.25%. QQQ basically flat. VIX under 19. But the bond market is basically saying, cool, thanks for the mop. Now tell me why the pipe is leaking. Next headline. Bessent's buyback strategy has not yet calmed the bond market. That's the important follow-through. The ramp-up is real, but yields remain elevated, and the desk is seeing persistent inflation concern still sitting on top of this market. Why it matters. Long yields are the discount rate engine for everything. Mega cap multiples, housing, banks, corporate borrowing, all of it. A buyback can help the plumbing, but if the market still wants an inflation premium, the long end can keep throwing elbows. And look at the cross-asset tell. Gold is up 1.55%, around 421.69, while the dollar is basically flat, around 27.91. When gold is bid into a government bond support story, traders are asking whether this is support or a symptom. Very macro, very annoying, very much our problem. Third big one. Oil prices jump on geopolitical tensions. ProTerminal's desk is tracking Brent crude nearly 3% higher to $94.31, with WTI up about 3.3%. Tied to threats of broader economic action against Iran and the UAE suspending trade with Tehran. Why this matters for investors is pretty direct. Energy is inflation's annoying group chat. It always finds a way to pull everyone back in. If crude stays firm, it can work against the very yield-calming trade Treasury is trying to create. Because higher energy feeds headline inflation, squeezes transport and retail margins, and can shift leadership back toward energy producers. Our live oil proxy is not chasing the headline right this second. Around 134.36, slightly red. So don't treat this like a straight-line panic bid. But this is the risk channel. Coming up, small cap momentum gets the microscope. And yeah, after this bond tape, the microscope might need a seatbelt.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. Mixed tape behind us. SPY barely green, QQQ a touch red, VIX lower. So when you've got names up triple digits, that is not index lift. That's pure event tape. Top line still RFAI, up 230 plus. Howl still wild, over 100% with monster relative volume. SDOT doubled. Jun's still hanging in that plus 70 zone. But here's the scorekeeping part. This board is not all clean continuation anymore. RFAI is showing 4256, and we had 45 flagged as the danger shelf earlier. Oof. If that mark is live, that shelf is gone. So we're not doing victory laps. We're going chart by chart and grading momentum versus trap. Okay, RFAI first. And yeah, this is exactly why we keep score here at the markets desk. Pull up the 1 minute. This is a SPAC shell, Financial Services Shell Company bucket. Float a little over 8 million in the data. High dilution risk tagged, and volume is huge versus normal. 1.8 million shares against about 38,000 average. So the percentage is insane, but these can get real air pockets. Board price is 42.56, still up 234%, but now it's under that 45 risk line we flagged. That changes the read. It's not, can it reclaim 50 anymore? It's, can buyers defend the low 40s at all? Fresh line for me is 42. If 42 starts failing and offers stack, that's where the crowd can get slippery. If it snaps back over 45 and actually holds, fine, buyers are fighting back. Right now though, not clean high of day momentum. Huge move, massive volume, but wobbling under the last shelf. Now howl. Pull up the 1 minute because this one's a totally different animal than RFAI. Stock sitting around 93 cents, up about 115%, and the volume is just ridiculous. 193 million shares, 267 times normal. The battleground for me is still that 91 cent area. If Howl keeps holding above 91 while volume stays heavy, that tells you buyers are still absorbing the supply from the merger and private placement spike. But if it starts living under 91, that's where these penny biotech moves can go from clean momentum to trap real fast. And remember, this is still under $1, high dilution risk name, so I'm not treating this like some clean large cap breakout. I'm watching whether the tape respects that level. Next. And this is the one where the headline number looks amazing, right? Stock basically doubled, now around 1730. But I want to be careful here because relative volume is only about 7.5 times normal, not 200 times normal like Howl. And that matters. On the 1 minute, I'm looking at whether the mid-teens are actually building structure or whether this is just thin air between candles. 17 is the first little line I care about for momentum staying firm. If it starts slipping back toward 15, that tells me the chase is getting tired. So yeah, big green candle on the board, but I want follow-through with real prints, not just a spready push in a small market cap name. Jun's is the biotech momentum check here, and the wild part isn't just the stock up 70%, it's the volume. 42.8 million shares on a name that usually does under 100,000. Relative volume, 443 times. That's insane. So on the 1 minute, I'm grading this really simple. Is that volume still supporting the bid, or was it just the opening explosion? Current prints around 880. $9 is the clean momentum test for me. If it can keep pressing through 9 with volume staying loud, okay, the bid is still alive. But if it starts slipping under 850 and pops keep getting sold, then that huge relative volume starts looking less like demand and more like distribution. Also, high dilution risk showing here, so yeah, don't fall in love with a biotech runner just because the candles are moving fast. Now flip it to the red side, MI. This thing is the opposite read. 328 down more than 54%, and even though the actual volume is only about 103,000 shares, that's still almost 10 times normal for this ticker. So the question isn't, is it green for one candle? The question is bounce quality. Are buyers actually reclaiming failed levels, or is every pop getting smacked right back down? For MI, I'd keep 350 on the screen as the quick reclaim line. Below that, it's just a pause inside a liquidation move. And if $3 gives way, that's the psychological shelf where thin names can get air pockety fast. Not calling a direction, just grading whether the bounce has any real sponsorship. All right, last one on this movers board. JZ follow up first, because this is where the downside call out matters. Pull up the 1 minute. It's sitting right around 220, down 33%, and volume's not tiny either. 700,000 shares, about 56 times average. So the question is simple. Was that flush just overdone, or is the dead cat bounce already failing? If 220 keeps acting like a magnet and it can't reclaim above it cleanly, that's still a weak tape. If it starts holding above 220 and building higher lows, then okay, maybe it stabilizes. But for now, I'm grading that as downside callout still alive, not invalidated yet. Now, quick lower board rotation. CAN at 36 cents is a crypto-adjacent hardware name, up 31%, but only 1.4 relative volume, so that's participation, not the same monster tape as Howl or Juns. CAN 212 up 31%, but relative volume under 1, so I'm not treating that like clean momentum either. MRNX is important, but it's a leveraged ETF tied to mRNA. That's product structure, not a standalone company breakout. Same thing with CRMU, 2 times long CRML exposure, up 29%, but again, that's a leveraged product move, not a normal single stock read. So the takeaway from the board, the real heat was concentrated in the top runners. The red side is still ugly, and the lower board has a lot of structure noise. Good mover skin. Let's hand it forward and keep the tape moving. Alright, quick small cap momentum hit MI. And this is exactly why we slow down on tiny names. MI is on the board as a nasty downside mover, roughly down 56% near 319. But look at the terminal feed here. The 1-minute candles are showing a 690 to 734 range, with the latest bars up around 730. So no fake confidence from the market's desk. The quote and chart feed are not lined up. On this chart, the structure is a base. Volume showed up over 710, sellers capped it near 734, and 700 was the floor. Oof, look at that wick zone near the highs. That's supply. But with the live board saying something very different, I'm not stamping this as clean breakout momentum. This is a verify the print name. Quick catalyst check on MI, and yeah, this risk stack matters. I'm not seeing a fresh same-day press release in what we've got. The headlines that stand out are older, but important. A 1-for-80 reverse split in May, and a $2.8 million registered direct offering back in March. Tiny market cap, Hong Kong NFT and online art platform, weird liquidity, corporate action history. That's a messy tape. If the feed cleans up and volume confirms, we can revisit it. Right now, MI is a caution flag, not a clean momentum green light. Coming up, we'll flip right back to the movers board. Alright, let's hit the movers board again. Same wild list, but now the levels are starting to separate clean strength from crowd unwind. SPY's green by 1/3%, QQQ barely green, IWM green, VIX slipping under 19. So this is not a panic tape. That matters. RFAI is still the headline monster, but look, 39.53 now, and that puts it under the 42 line we flagged. The plus 210 headline is loud, but the level is louder. Howl is still glued around that 91-cent fight, huge volume, biotech chaos. SDOT's still up 82%, but it's not back at 17. Juns is 8.75, under 9, and that 940 break we called out earlier did hit. Red side, MI down 56, JZ down 34. Oof. So the board's alive, but it's not all clean momentum anymore. Let's pull RFAI first, because this is the one where the crowd can get trapped fast. 1-minute chart up. This is a shell company style name. 8.34 million float. About 1.89 million shares traded. 49 times relative volume. So yeah, the participation is real. But the structure is what matters now. Price is 39.53 after that 210% board move. And the key thing is simple. It already lost that 42 area. That was our unwind line. Now I'm watching 40 as the first reclaim attempt. If it can't get back over 40 with real candles, not just a skinny wick, then every pop under 42 is suspect. Above 45 was the bigger buyer fight backline from earlier, but we're not there yet. Here at the markets desk, I don't care how big the percent gain is. If the chart is living below the shelf, that's fade risk territory until buyers prove otherwise. Now, Howl. This one is a totally different flavor than RFAI. 1-minute chart here, and the whole fight is basically around 91 cents. It's trading right on that pivot at about 0.907, up roughly 110%, and the volume is just absurd. 204 million shares, about 282 times normal volume. So yeah, there's real participation, but it's still a penny biotech with high dilution risk. That matters. Above 91 cents, buyers are at least defending the breakout area. Under it, you don't want to pretend it's still clean momentum if the tape starts slipping and every pop gets sold. This is the kind of name where the chart can look strong for 3 candles and then completely unwind, so I'm treating 91 as the control line, not a victory lap. Flip to SDOT next. This one's sitting around 1538, still up 80+%. But now the question is whether buyers can rebuild or whether this is just a lower high fade after the big impulse. The cleaner momentum line for me is 17. If SDOT can push back towards 17 and actually hold higher lows into that area, okay, that tells you buyers are trying to take control again. But if it keeps failing under that zone and starts living closer to 15 than 17, then the character changes. Volume's not Howell level crazy, about 6.7 million shares, 9 times normal, so I'm not treating this like the same crowd stampede. It's still moving, but it needs confirmation. 1530-ish holding keeps it alive. 17 is where the momentum crowd really has to prove it. Jun's next. And this is the one where the headline number looks insane, but the tape is starting to tell you something a little different. We're still up about 69%, trading around 875, and the volume is wild. 43.9 million shares, with 454 times relative volume. So yeah, there's a tension here. But look at the 1 minute after it lost 9, and then couldn't hold that 940 area. That's the shift.
Earlier dips were getting absorbed fast. Now the bounces are getting smaller, and buyers have to prove they can actually reclaim 9. If Juns gets back above 9 and holds it, okay, maybe the crowd stabilizes. But under that, it's more of a trapped momentum look than clean control. And platforms flagging dilution risk high here too. So on a biotech runner like this, I'm reading levels first, not falling in love with the story. Now, USDEW. Totally different product here. This is stablecoin X warrants, not the common stock. So the read has to be liquidity aware right away. It's at 117, up about 63%. But the volume is only about 257,000 shares. So this can move sharply without the same depth you'd expect in a cleaner common equity tape. The angle is the stablecoin infrastructure story. Ethena ecosystem exposure, software infrastructure. That's the narrative pulling attention. But on the 1 minute, I'm not overreading every candle. For warrants, I want to see whether 120 becomes an actual acceptance area, not just a print. If it rejects there and slips back toward 110, that's where the air pocket risk shows up. So USDEW is interesting, but it's a structure and liquidity name first, momentum name second. Last pass here. Flip MI, because this is the loser side chart and it matters for the board tone too. MI is down 56%, sitting around 317, and the bounce quality is the whole question. If this is just a dead cat bounce, you'll see it keep rejecting under that 350 area. That's the spot I'd want reclaimed before I'd call the pressure easing. Under $3 though, that changes the feel fast, because then the chart starts acting like sellers are still fully in control. And then a quick quality check on the lower board names. EMAT's up 27%, but relative volume is only about 2.76, so that's not the same animal as Howell, doing hundreds of millions of shares. Kang is up 35, but RVol is just 1.18. Decent move, not the kind of participation that screams clean momentum. And CRMU, careful. That's a 2x leveraged ETF product, not a normal operating company equity. So the structure itself can exaggerate the move. So yeah, board takeaway. The real heat was in the high RVol runners, but down here you've got to separate actual demand from thin liquidity and product mechanics. All right, movers board is marked. Coming up next, we'll shift off the chase names and hit the broader tape. All right, let's pull up Google and do the mega cap level check. Daily chart first. This is not the small cap circus we just left. Totally different game. Google's green by about 0.4, while QQQ is basically flat, plus 6 beeps. So yeah, slight relative strength, not a rocket. On the daily, the story is clean. Big prior expansion from the low 330s into the 380s. Even a 400 handle print in the look back, then it cooled off. Now it's boxed in. Mid 340s. Tight candles. Volume drying up. That's compression. Current daily map, 340 support, 350 resistance. Here at the markets desk, this is where I get picky. Price is still under the short-term moving average zone, roughly that 348 to 352 shelf. So there's supply overhead.
but it's still above the longer-term 200-day area, so the bigger structure isn't smashed. RSI around 45, ADX around 9. Boring, low-trend tape. Williams is washed out near negative 92, so sellers may be stretched, but don't mix up stretched with strong. Watch 350 above. That's the top of the recent box. Watch 340 below. That's the line where this stops looking like a base and starts looking like a failed range.
Thanks, Markets Desk. All right, top of the hour reset here from the macro desk. It's 11 o'clock a.m. Eastern on Friday, and the headline is pretty simple. Green tape, but not exactly a victory parade. SPY's at 765.9, up 0.43%. QQQ's at 711.9, up 0.14%. IWM's at 298.7, up 0.34%. VIX is lower at 18.93, down 1.35%. So the market's risk thermostat is cooling a bit. But breadth is still mixed, so this isn't everybody holding hands and singing. Under the hood, bonds are still not giving equities a giant hug. TLT is down 0.35%, IEF down 0.19%, which means yield pressure is still part of the story. And that matters because the earlier Treasury buyback headline, doubling long-end buybacks from $2 billion to at least $4 billion per operation, is support, yes, but it's not a magic wand. The long end still has to actually calm down. Cross asset? This is the interesting split. The dollar's a little firmer, UUP at 27.935, up 0.09%. The yen proxy is barely green, FXY 57.715, up 0.10%. Gold is still bid, GLD 420.75, up 1.32%. While oil's not really adding stress today, USO 134.25, down 0.22%. So the market is saying we're okay with risk, but we still want a helmet nearby. Crypto's got the loudest room right now. BITO up 6%, Coin up 7.5%, NSTR up 5.35%, which lines up with what the markets desk was just seeing in the crypto-adjacent movers. Here's what I'm watching from the macro seat. QQQ around that 711.9 to 712 area, VIX around 19, GLD holding above 420, and the PMI batch at 1:45 p.m. Eastern. Composite, services, manufacturing. Coming up, we kick it back to the market mover scam, then the news intermission after that.
Thanks, Macro Desk. All right, Markets Desk is grabbing the movers board. Indexes are greenish, but not screaming. SPY up 0.4, QQQ barely green, IWM up 1/3, VIX red. So when you see RFAI up almost 250%, Howell more than doubling, SDOT up 86, USDW ripping, June's still up big, that's not the market lifting everything. That's single stock chaos. Good chaos, but chaos. And yeah, RFAI, that 40 level we flagged just got hit. Nice scoreboard hit. Now the only thing that matters is acceptance. Does it hold the move? Or was that just a print into air? First up, RFAI on the 1 minute. Look, this is the top of the board for a reason, $44 and change, up about 249%, with 1.93 million shares traded against a normal average under 40,000. That's a real tape event. But here's the catch. Shell company, SPAC-style profile, tiny normal volume baseline, high dilution risk on the data. So this is not some clean mega cap trend read. This is a momentum box. Above 45, I want to see if buyers can actually keep accepting higher prices instead of just wicking through. Below 40, oof, that would make the breakout hit look way more like a trap. Markets Desk scorecard, 40 hit, good. Now 45 above, 40 below. Now Howell. This is the classic under a buck biotech squeeze tape. 91 cents, up about 112%. And the number that jumps off the page is volume. 208 million shares, almost 288 times normal. So yeah, there's real attention here. But with these, I don't care about the headline move as much as the follow-through. If the 1 minute candles keep accepting above 90 cents, okay, buyers are still defending the move. If it loses that area and starts living under VWAP, that's where these can turn into a really fast fade. And remember, this one does carry high dilution risk, so I'm treating the chart like a squeeze read, not some clean long-term quality story. S. Next. And this one's a different feel. Mid-teen stock, 1560-ish, up 86%, but only about 11 times relative volume. Still big, just not the absolute monster that Howl is. What I'm looking for here is whether the bid is actually building under the move, or if these are just thin air pockets getting jammed higher. If 15 bucks keeps getting absorbed and it bases instead of instantly giving it back, that's a healthier momentum look. If every push into the upper 16s gets slapped and the candles widen, that's more spike behavior. High dilution risk here too. So again, price action first, story second. USDEW now, and this is a warrant, so totally different rules than the common stock runners we just hit. Screens on the 1 minute here. 133, up about 85%, but only about 350,000 shares traded. So yeah, it's moving, but this is where you've got to respect the spread. On warrant tapes, a level can look clean, and then it's just two prints in a wide market. For me, the whole read is the 130 area. If the 130s keep holding and you see actual prints stack there, okay, that's constructive. If it slips back under 130 and liquidity disappears, then that move may have just been a thin air squeeze, not real follow-through. Back to JUNS, this is one of the crazier volume names on the board. 850-860 area up 66%, and the relative volume is just wild. 460 times normal on 44 million shares. That's biotech momentum. So I'm not treating this like a quiet accumulation chart. I'm asking one question: can it reclaim the high eights with authority, or are sellers leaning on every pop? If 860 starts acting like a launch pad again and volume comes with it, then the tape has life. If it keeps rejecting there and starts losing the mid-eights, that's the rollover look. Also, dilution risk is marked high here, so on these names I care way more about the intraday structure than the story. Price, volume, and whether the bid is actually staying firm. Okay, quick flip to the red side. MI first. This is not a normal minus 2% pullback. This is a 56% haircut. 313 on about 19 times normal volume. So the bounce quality matters more than the headline loss. For me, $3 is the line on this one. Above it, at least you can argue it's trying to base. Below 3, the sellers are still in control and any pop is just a bounce and a broken tape. And then JZ, same loser board idea but even more active. 223, down 33%, 57 times relative volume, tiny float and high dilution risk on the board. So with JZ, I don't want to romanticize the dip. If 220 starts slipping, that's not stabilization, that's leakage. These are the names where you let the chart prove it first. Green candles with volume, higher lows, something. No proof, no hero story. Last lap on the lower board, Kang first. 215, up 33%, but only about 2 times relative volume, so this isn't the same insane tape as Howl or Juns. Bigger float, Nixie name, medium dilution flag, cleaner but slower. The $2 area is the gut check. Hold above it, and the move still has structure. Lose it, and it's just a stretched pop. Now mRNX, totally different animal. This is a daily target 2x long mRNA ETF, not a company chart, so don't read earnings, float, catalysts into it the same way. 96 bucks, up almost 30%, a million shares traded. That's leveraged ETF mechanics and underlying biotech exposure. So size and daily reset risk matter a lot, if anyone's even watching it. And then EMAP, basic materials, 431, up 29%, relative volume just under 3, so this is more sector participation than meme volcano. $4 is the line I'd keep on the screen for structure. So quality check from the movers board, strongest momentum was RFAI, Howl, and Juns. The loser bounce tests are MI and JZ, and the cleaner lower board reads are Kang and EMAT, with mRNX in its own leveraged ETF bucket. Alright, mover scan is done. Let's hand it forward to the next live read.
Thanks, Markets Desk. Quick news brief from the macro desk. And the top wire is Middle East tension hitting the Asia Open setup. ProTerminal is tracking Asian stocks pointing lower as oil risk premium stays in the conversation after renewed conflict in the region. Now, tiny wrinkle. Our live oil board has crude around 134.25, actually a touch red right now. So this isn't a straight line crude chase this minute. But the market impact is still real. Energy importers get squeezed, inflation nerves come back, and gold sitting around 420.75 says somebody out there still wants a helmet. The inflation genie had maybe one shoe back in the bottle. Next headline, China materials stocks are emerging from the slump as new market leaders. That's the desk seeing rotation into industrial and commodity-linked areas, not just another random green pocket. Why it matters. Materials leadership usually says investors are sniffing out infrastructure demand, commodity demand, or at least a cyclical bounce attempt. The catch is the same old macro catch. If global growth wobbles and energy costs rise, that leadership has to prove it's more than a two-day costume change. Third story. Australian 3-year bond futures positions are near record levels on hedging demand. Translation from macro desk to human, a lot of money is buying insurance around rate volatility. That doesn't tell you the exact direction of the next move, but it tells you the rates market is not asleep at the wheel. You can see the same flavor in our US bond proxies too. TLT around 82.05, down about 0.35%. IEF around 92.83, down about 0.19%. So, equities are green, yeah, but the bond market is still tapping the microphone. All right, breaking news first here from the macro desk. Global stocks are tracking toward their biggest weekly fall since mid-July as bond yields and oils stay high. What we know? The pressure is broad. It's not just one weird pocket of the market, and the main squeeze points are still rates and energy. Higher yields keep leaning on valuation, and oil staying elevated keeps the inflation conversation alive, which is exactly the kind of two-front problem equity bulls hate. What we don't know yet is whether this is a one-week repricing or the start of a bigger de-risking move. And yeah, the US tape is green right now. SPY around 765.8, QQQ around 712.3, VIX under 19, but that's the intraday bounce. The bigger headline is the weekly global drawdown. Classic market behavior. Smile on the minute chart, frown on the weekly chart. Next headline. Oil is set for a second weekly gain as pressure on Iran ramps up. The fact pattern is pretty simple. Geopolitical risk is keeping a bid under crude, and the market is treating supply risk like it matters again. On our cross-asset board, oil's sitting around 134.15, slightly red on the session, but still elevated enough that nobody in macro gets to ignore it. Why it matters? Higher energy costs can feed inflation expectations, pressure transport and consumer-sensitive names, and complicate the rate story. Oil is basically the market's annoying roommate right now. Even when it's quiet for the hour, you still know it's in the apartment. And third, the dollar is wobbling as Treasury bond market buybacks raise fresh concern. The desk is tracking a choppy dollar, with the dollar proxy basically flat around 27.92, while bonds remain soft. TLT around 82.10, down about 0.3. IEF around 92.87, down about 15 basis points on price. Why investors care? When the dollar and yields both get jumpy, it hits everything global. Multinationals, commodities, emerging markets, even mega-cap earnings translation. Gold's the tell here too. GLD already hit that 420 level we flagged earlier, now around 421.3, up about 1.5%. That's not panic, but it is a hedge bid. Coming up, we'll rotate from the macro pressure into the sector theme spotlight and see who's actually absorbing this tape.
Thanks, Macro Desk. Let's hit the movers board and see where the tape is actually paying up. Green indexes, mixed breadth. SPY up about 0.4. QQQ barely green. IWM up about 0.5%. VIX under 19. So this is not an everything rips tape. If something is up triple digits, that's single name heat. Top row is RFAI, $42 and change, up 231%, 51 times relative volume. Then Howell, still huge, 214 million shares. But hey, that 90-cent line we flagged just got lost. Price is 88 cents now, so momentum's getting tested. SDOT is still parked near 1680, almost a double. USDEW, the warrant, is back near 124 after losing 130. JUNS is wild too. 67%, 466 times relative volume. Here at the markets desk, this is the job. Separate real acceptance from a hot quote that faints the second you blink. Okay, RFAI first, top of the board, and this one needs respect, but also a helmet. It's a shell company, SPAC-style name, high dilution risk in the data, about 8.3 million float, and it has already traded just under 2 million shares. That's why the spread between story and structure matters here. Current board price is 42.23, up 230 plus. I don't have a clean VWAP number in this feed, so I'm not making one up. I'm keying off the 1-minute tape and the scorecard. At the 42 handle, it's not full control, it's not dead either. First thing I care about is whether the next push can accept above 43.50 without instantly wicking back. Oof, if you see candles punch and reject, that's supply, not strength. On the downside, 40 is still the trap line. Lose that, and the whole top board look gets a lot less clean. Now howl, look at this tape, man. We're sub-dollar sitting around 88 cents, up a little over 100%. And the volume is just absurd. 214 million shares. That's not a typo. This is the merger/private placement heat name today. And the key follow-up is that 90-cent push. It got the tag, but the question now is acceptance. If 90 keeps rejecting it, that's where these sub-dollar momentum names can turn into quick fades. If it can keep chewing through 88, 89, 90, with volume still stacked, then it's still in the game. But with high dilution risk on the profile, I'm not treating this like clean blue sky momentum. This is a trade the levels type chart, and it needs liquidity to stay there. Flip to SDOT next. This one's cleaner in price, but still absolutely wild. 1680-ish now, basically an almost double on the day. And you've got about 9.4 million shares traded versus 13 times relative volume. So this isn't just one random print. There's been real participation. The structure I care about is 1650 versus 15. 1650 is your immediate acceptance check. Can it stay above that zone after the big extension? If it loses that and starts sliding, then 15 becomes the bigger structure line where you find out whether buyers are actually defending or whether this was just a vertical squeeze that ran out of air. Huge move, high dilution risk showing here too. So again, respect the strength, don't marry the candle. USDEW now. And this is different from the first three because this is warrant-only momentum. So don't treat this like a normal common stock tape. It's around $1.24, up 70+%, but the big thing for me is the failed $1.30 area. It had the look. It tried to hold that 130 zone, lost it, and now the question is whether 120 is real support or just the next pause before the spread opens up. With warrants, man, you can be right on direction and still get chopped because the bid-ask gets ugly. So for this one, I'm watching quality of prints more than the headline percent move. If 120 keeps getting defended with actual volume, okay, there's still some fight. If 120 starts slipping and the candles get thin, that's when the gainer board number can be super misleading. June's next, and this is the biotech one with the crazy relative volume print. 466 times normal volume. That's not casual interest, that's the whole tape finding it today. Price is mid to high 8s, about 67% green, and the read here is acceptance versus rug pull risk. If it can live in the high 8s, call it that 8.70, 8.80 area, and not instantly reject, then you've got traders respecting the move. But if it pops over, stalls, and then flushes back through the mid-8s, that's the classic biotech fast rug. Tiny market cap, high dilution risk on the board, massive volume, so the chart can look clean for 3 minutes and then completely change personality. I like the volume confirmation, but I don't trust it unless those high 8 bids keep showing up. Alright, quick loser side check before we wrap the board because with SPY green and IWM green, the red names matter too. MI first, this is down 57%, still trading heavy around 310, and that 3.00 line is the whole conversation for me. If it's bouncing but can't actually reclaim away from 3, that's not strength, that's just a dead cat pause. Now JZ, same idea. Smaller float, high dilution risk profile, big relative volume, and it's sitting right above 220 after getting smoked. Watch that 220 area. If buyers don't defend it, the bounce quality is pretty weak. Now lower board lap. CANG is cleaner participation, up about 40%. Bigger float, medium dilution risk, and honestly, this is more normal than the crazy top board stuff. $2 is the check there. CRMU, totally different animal. That's a 2x long daily ETF, so don't read it like common equity. It can move, but structure matters, resets matter, and $2 is still the line on the chart. EM at last, up 30%, decent volume, sitting above 4. So $400 is the simple pressure test. That's the movers board. Top was pure momentum, bottom had some warning signs, and now we'll keep rolling into the next hit.
Thanks. Markets Desk, let's pull up the AI semi-basket. Because the real company question here is whether AI spending can keep winning even with oil and yields still leaning on the tape. NVDA is the lead name on screen, about 215.18, down roughly 0.75%, while QQQ is still green by about 0.2. So that matters. This isn't the market dragging everything lower. This is Nvidia lagging a green tape. For me, watch 215 on NVDA. If that area keeps giving way, the whole AI semi-story looks a little heavier into next week. Okay, here at the company desk, I don't want to just say AI is strong and move on. What does it actually change? The fresh story on Nvidia is very simple. The market is setting up next week's fiscal second quarter report as a proof point for the entire AI spending boom. The article has it right in the headline. Nvidia has 1 week to prove the AI capex cycle is still alive. And that print is listed for Wednesday, August 26th, after the close. Then you've got these partnership headlines underneath. Medical AI models with Nvidia, robotics data platforms using Nvidia Cosmos, and the big one earlier this week, the Ohio Ports Pike campus where Nvidia is tied to exclusive AI compute infrastructure. That's the bull case story. Demand keeps broadening. But the skeptical version is, how much capital support, power, land, and infrastructure commitment is needed to keep that demand flywheel going? That's why higher energy and higher rate pressure actually matter to a chip stock.
Thanks, company desk. Quick stock whisperer check on the simulated paper book. We just opened the WMT short, 80 shares short at 102.51, and it's marked right around 102.535, so basically flat. Down about $2, nothing to celebrate, nothing broken yet. The setup is simple. Pro Terminal flagged the disappointing Walmart results, and in a mixed tape, SPY green but bread still not clean. I'm treating this as an earnings pressure short with defined risk. The first tell is 101.50 below. If sellers can actually push it through there, that's the follow-through I'm looking for. If it reclaims up toward 105.40, that's the risk line where this thesis is wrong in the paper bracket. Simulated account, broadcast only, not a copy me trade. Zooming out on the rest of the sheet. AMZN long is the sore spot. 35 shares from 261.72, now 259.02, down $94. 258.80 is the pressure line, before I start thinking the setup is really weakening. BABA short is slightly against us, down about $40. SOXX short is doing the work, up $96, which fits the macro pressure semis theme we've been talking about. XLRE long is quiet but green, up about $34. On the orders tab, WMT is clean, cover limit at 96.50, stop at 105.40. BABA, SOXX, and AMZN brackets are still live and unchanged, and cash is roughly 79 grand. Watch list stays tight. WMT below 101.50, AMZN below 258.80, and NVDA only matters to me above 216.50 for large cap momentum. Coming up, we'll swing into the Pro Terminal promo. Thanks, Stock Whisperer. All right, Markets Desk is jumping back to the movers board. Look at this board. Indexes are green but not crazy. SPY up about 0.4. QQQ barely green. IWM green. VIX under 19. And the top of this thing is still absolutely wild. RFAI up 235%, 51 times relative volume. SDOT still more than a double on 11 million shares. Howell, sub-dollar biotech, 217 million shares, 300 times relative volume. That is the loudest volume line on the board. Then USDEW, the warrant, almost a double, and JUN still sitting plus 60 with 471 times rel vol. So this is not a sleepy green index tape. This is select momentum. We're going one by one, 1-minute charts, and we're separating momentum from traps. Okay, RFAI, first, top of the board, and oof, this is the kind of candle where you have to slow your brain down. Current print is around 42.70, up 235%. just under 2 million shares traded, about 52 times normal volume, and the float is roughly 8.3 million. That explains the violence. On the 1 minute, I'm not trying to call a top. I'm watching acceptance. If buyers can actually build above 43, that tells you the squeeze still has control. If it loses 40, that's where I start treating it as failed momentum instead of clean continuation. Big difference. And quality filter matters here. Pro terminal marks dilution risk high, so the tape can be real and the structure can still be sketchy. SDOT next. And this is the cleaner post double check. Stocks around 17.85, up about 111%. But the key difference from the top SPAC style rip is this actually has over 11 million shares traded, about 15.9 times normal volume, so there's real tape here. Still, don't fall in love with it. Small market cap, high dilution risk tag on the board, and after a stock doubles, the question is super simple. Are dips still getting bought around VWAP, or are the lower highs starting to stack? If this can keep reclaiming the 18 area and holding above VWAP, that's controlled momentum. If it starts losing VWAP and can't bounce back quickly, that's when this turns from momentum into late chaser fade risk. Now, howl. This thing is the volume monster on the board. Sub-dollar biotech, 88 cents-ish, up 105%. And look at the share count traded, 217 million shares. That is wild. Relative volume is over 300 times average. So this isn't some quiet drift. This is the whole room piling into one name. But with biotech under $1, you have to treat every bounce as guilty until proven otherwise. The big firm up level is that 90-cent zone first, then obviously the dollar magnet if it ever gets there. If it keeps rejecting under 90 and VWAP starts acting like resistance instead of support, that tells you the bounce is getting sold. If buyers keep stepping in and it builds higher lows, then okay, the tape is still alive. But this is still high-risk, high-speed stuff. USDEW now, and this is where I'm going to slow it down again because this is not the common stock, this is the warrant. Big difference. Current print is around 1.41, up about 96%, only about 708,000 shares traded. So yeah, it's moving, but the structure matters. Warrants can gap, spreads can get weird, and if the underlying story cools off, these can lose momentum fast. On the 1 minute, what I care about is whether it can actually build above the low ones instead of just whipping candle to candle. If buyers can keep it firm over 130 and then start cressing toward 150, okay, that's cleaner momentum. But if it loses that low ones shelf, don't treat it like a normal liquid common. This is exactly where chasers can get chopped up. Jun's next. Biotech runner. And this one has the ridiculous relative volume number. Over 45 million shares traded. Almost 472 times normal volume. That's not a typo. Stocks around 8.42, up about 63%, so this is still very much alive, but the question now is bounce quality. After a move like that, every reclaim has to prove itself. I'm watching whether buyers can defend the 8 area and start reclaiming above the mid-8s, because if it can't hold 8, that's when the rug pull risk starts taking over the tape. High dilution risk name too. Healthcare biotech, tiny market cap profile, so I'm not romanticizing the move. Great volume, huge attention, but the candles have to keep confirming or this turns into one of those fast unwind charts. Alright, quick loser side lap, then we'll clean up the bottom of the board. MI first, NFT Limited, around 315, down 56%, and that relative volume is still huge versus its normal tape, about 25 times average. But this is the other side of momentum. I'm not calling this a bounce just because you get one green candle. On a pressure name like MI, I want to see whether it can actually stabilize around that $3 area, or if every little push is just getting sold into. If it loses 3 again, that tells you sellers are still driving the bus. Now flip to JZ. Same idea, different chart. JZ is around 229, down 31%, with almost 59 times normal volume. That's a big unwind for a small education name, and with high dilution risk on the profile, I'm treating bounces here as guilty until proven otherwise. For JZ, 230-ish is the near-term battleground. If it can't reclaim and hold that, it's still pressure first, bounce second. Okay, now quality filter on the lower board gainers. Kang is the cleaner common stock move to me. It's not up 200%, it's up about 38%. Volume is 2.6 million, relative volume 2.8. So this is more normal participation, less chaos. Around 223, I'd rather see it hold that 220 zone than spike and instantly give it back. CRMU next. Important distinction. This is a 2x long CRML daily ETF, not a regular operating company chart. So the 33% move is product mechanics plus the underlying move, and that can reset weird intraday. Same with MRNX. Daily target 2x long mRNA ETF, up 30%, trading around 97. Big percentage, yes, but it's a leveraged ETF, so don't compare it one for one with a biotech common stock. That's the filter today. Common stock volume participation on names like Kang versus warrants and 2x products where the move can look cleaner than the risk really is. We'll park the movers there. Coming up, let's swing back to the broader tape and see whether this green market is actually broadening or still just a pockets of momentum day.
Thanks, Markets Desk. Breaking here from the Pro Terminal newsroom. Global stocks are facing their biggest weekly drop since mid-July, as bond yields stay elevated and oil prices stay high. What we know, the pressure is coming from the two classic margin squeezers, funding costs and energy costs. TLT is sitting around 82.09, IEF around 92.84. So bonds are still not exactly throwing a party, and oil is parked up near 134.38. What we don't know yet is whether this is just weekly de-risking into Friday or the start of investors marking down earnings power more aggressively. Here at the macro desk, the read is simple. Stocks can handle bad news, they can handle higher oil, they can even handle rates, but all three at once is like asking the market to jog with ankle weights. Next headline. Oil prices are heading for a second straight weekly gain as U.S. pressure on Iran tightens. The fact pattern is supply risk premium. Not just demand, not just charts, actual geopolitical constraint risk getting layered into crude. Why it matters. If oil holds up near that 134 area, it feeds straight into transportation, industrial input costs, airlines, chemicals, and then the inflation conversation nobody on the desk wanted back in the room. Energy names like XOM and CVX can catch a bid in that tape. But for the broad market, expensive oil is basically a tax with better branding. And on the corporate side, Micron is committing $10 billion for future growth aimed at expanding memory and semiconductor production capacity. That matters because semis are still the growth engine traders keep circling back to, especially with AI and data center demand in the background. But the macro catch is timing. CapEx at this scale is confidence, yes, but it's also spending real money while rates are elevated. MU becomes part of that bigger question. Can the chip cycle keep outrunning the cost of capital cycle? Coming up, Mega Cap Watch should give us a cleaner read on whether the big leaders are confirming that story or quietly fading it.
Thanks, Macro Desk. Quick Pro Terminal lap while the tape's still green and the board's still spicy. First stop, Dilution Center. This is where the Markets Desk checks the stuff that can wreck a clean-looking squeeze. Shelves, ATMs, offerings, fresh supply. Not glamorous, super important. Before I care about a wick, I want to know if supply is sitting over the name. Now flip back to the movers board. This is the heartbeat of the show. Top gainers, top losers, price, percent move, relative volume when it's there, all in one shot. And key point, this is not a buy button. It's a research starting line. Markets only modestly green. SPY up about 0.5%. QQQ green but not wild. So when a small cap row is exploding, you still ask, is it volume, float, catalyst, or just a trap? Let's use KNRX as the example. I'm not pitching the stock. I'm showing the workflow. Click the name, hit filings, and now you're doing actual homework instead of vibes trading. If there's an offering, a shelf, an 8K, weird language, this is where you go look. Then insider trades, same idea. Who filed what, when, and does it line up with the move on the tape? Sometimes data can be delayed or incomplete, so you don't treat any one tab like magic. And then we finish where I basically live, the 1-minute terminal chart. Candles, volume, levels, VWAP behavior, that's the live read. Oof, that's the difference between just seeing a big percent gainer and actually understanding the tape. Everything we're driving on this stream, movers, dilution, filings, insider data, the charts, that's ProTerminal. Educational tool, research workflow, not financial advice. If you want the same dashboard, sign up at proterminal.io.
All right, let's pull up Meta. Mega cap check, daily chart first. So the tape's greenish here, SPY up about 0.5%, QQQ up a little under 0.4, VIX lower. Meta's up about 1.4%. So today, yeah, it's got relative strength. But zoom out, oof, this daily is still damaged. Lower highs, lower lows, all the way down from that high 600 zone into the 540s. Prices under the 20-day near 576, under the 50-day near 593, and under the 200-day around 624. That's not leadership yet. Here's the markets desk scorecard on the daily. The 540 area is the floor that matters. Recent candles bounced from that zone. Day low around 543, current area mid-550s. But the bigger issue is quality. The heavier volume showed up on the sell-offs, especially when Meta cracked lower from the 600s. The bounce volume has been lighter. So for me, 576 is the first repair level because that's where the short-term average sits. Then 600 is the big character line. Under 600, rallies can still just be lower highs. If 540 cracks, that little base attempt loses credibility fast. Now, let's drop down to the 1 minute, because this is where Meta actually gets interesting intraday. Range today is tight, roughly 548.80 on the low, 553.50 on the high. It opened around 550, chopped, then got that real push from 552 into 553.50. And that part matters. Volume actually confirmed it, with those bigger 1 minute prints in the 43 to 64,000 share range. But look at what happened after. It couldn't hold the high, pulled back, and now it's stalling around 549.60 to 549.90. So the intraday read is clean. Above 553.50 with volume, buyers have the ball again. Lose 549.30, and that breakout attempt starts looking like a lunchtime fade. So bottom line on Meta. Intraday, it's alive. Daily, it's not repaired. Big difference. Markets giving it a little help with QQQ green and VIX lower. But Meta still has to prove it can do more than bounce off the 540s. I'm keeping the live score simple. 553.50 is the squeeze-through level. 549.30 is the fail line. 540 is the daily danger zone. Not chasing conclusions off one midday push. Coming up, we've got that LGCL deep dive, so stay with the tape. All right, quick deep dive on LGCL. And yeah, this one needs the warning label right up front. LGCL is trading around 6.8 cents. This is a sub-dime stock. Anything under 10 cents can get delisted at any time, and it's not something I'd recommend for day trading. We're looking at it because the tape is active, down about 19% while SPY and QQQ are green, so that's real relative weakness. Volume is huge, 55 million shares against average volume around 256,000. But price matters more than noise, and right now price is not ripping. Oof, look at that early wick structure. The open was around 6.89 cents. Quick dip, bounce attempt, then sellers hit it again. The big tell here is the 916 candle. Spike up near 6.96 cents, and then it gets smacked down towards 6.67 cents on heavy volume. That's not clean momentum. That's supply showing up. Then around 936, another flush into the 6.54 cent low with close to 500,000 shares on that minute. Since then, smaller candles, lower energy, trying to base between roughly 6.7 and 6.9 cents. So here at the markets desk, the scoreboard is simple. Above 6.9 cents, maybe buyers are actually reclaiming the range. Below 6.65 cents, especially with volume, the base is leaking again. No hero trades needed in this kind of tape. Now let's check the catalyst trail, because with these microcap names, you always want to know if there's actual news today, or if it's just volume chasing volume. I'm not seeing a fresh same-day press release in the data here. The recent items are older. July 2nd, the company gave financing plan updates, and back on June 10th, they announced 2 invention patents tied to agentic AI applications in insurance. That's the story they've been leaning into. AI PaaS human capital tech out of China. But today's chart is not acting like clean catalyst strength. It's acting like a thin name with massive turnover, early selling pressure, and buyers trying to stabilize a tiny price range. Last piece. Dilution. This is why the market's desk does not treat subdime volume like a victory lap. LGCL shows medium dilution risk, 3 active shelves, an active equity line, and 100 million raised over the last 12 months. Float in the overview is just over 1 million shares, so yeah, it can move violently, but overhead supply risk is sitting high in the dilution read. That matters, so my levels stay tight. 6.9 cents has to be reclaimed before this looks less broken intraday, and 6.65 cents is the leak line. Under that, the morning low at 6.54 cents is back in play. Coming up, we've got the deal beat on deck, so we'll shift from tiny tape to transaction math next.
Thanks. Markets Desk. Let's stay with Howell for a second, because this one is not just a chart move, it's a deal story. Here at the company desk, the headline is pretty direct. Werewolf Therapeutics and Ambrose Therapeutics announced a merger agreement, and alongside it, an oversubscribed $150 million private placement. So the first question is simple. What does this actually change for the company? Okay, so the structure matters. This is described as an all-stock merger, not a cash takeout. That means we're not talking about the classic clean deal math where there's a cash price and you can immediately measure the spread. We don't have a public Ambrose ticker on the feed here, and we don't have the exchange ratio or pro forma ownership split in this summary, so I'm not going to pretend there's an ARB calculation to run. The story is more strategic than that. 2 biotech pipelines being combined, with a fresh financing package attached. That can be powerful if the combined company gets a cleaner runway and a better pipeline focus. But it also means the market has to judge execution, not just a headline premium. Now, the $150 million private placement is the second half of the story, and honestly, that's the part I care about most. In biotech, capital is oxygen. If this funding extends runway, advances the combined therapeutic pipeline, and gives management time to hit clinical milestones, that's a real business change. But the skeptical side is cap table math. Private placements can strengthen the balance sheet, sure, but they can also change ownership and dilution dynamics. So I'm treating this as a funding and pipeline reset, not just a merger equals bullish headline. The stock can rip on the story. The company still has to prove the new structure is better than the old one. Let's bring it back to the tape. Howell is still up huge on the day. Latest board print had it around 89 cents, up roughly 106%. But remember, the markets desk had that 90-cent fail line hit earlier, and that is actually useful here. The broader tape is green. SPY and QQQ both positive, VIX lower. So if this deal bid is real, you want to see the stock repair back above that 90-cent area and actually hold it. Under that, it's more of a headline spike that's being sold into. Above it, at least the market is saying, okay, maybe the merger plus cash story deserves another look. No victory lap here. It's still a sub-dollar biotech. It's still deal execution plus financing risk. But 90 cents is the line I'd keep on the screen. Coming up, we've got a sector-themed spotlight, so we'll see if this kind of single-name momentum is showing up anywhere else. All right, here at the company desk, let's pivot from deal math into the AI semo basket. NVDA first, then AVGO, MRVL, and AMD. And right away, this is interesting. The tape is green, QQQ is up about 0.6, breadth is mixed, but NVDA itself is actually red on the day, trading around 215. So the question is simple. Is this just pre-earnings digestion, or is the market starting to ask harder questions about the AI spend cycle? Look at NVDA on the intraday chart. This is not acting like the clean leader today, even with the index bid underneath it. Price around 215, down roughly 0.75% on about 39 million shares traded. So it's not asleep. It's just not getting rewarded the same way the broader growth tape is. For me, 215 is the live reference area. If NVDA can reclaim and actually stay above 215 with better volume, okay, then maybe this is just controlled consolidation ahead of the print. But if it keeps stalling right here, while QQQ stays green, that's a small but real relative strength warning. Not a trade instruction, just the tape telling you the leader is not leading right now. Now, the reason NVDA matters so much this week is the company story is bigger than one chart. Pulling up the news flow, the market is already framing next Wednesday's Q2 earnings as a referendum on the AI spending boom. One of the headlines has revenue expectations near $91 billion. And the language is exactly what you'd expect. Data center, Blackwell demand, AI infrastructure. That's the setup. The stock is a $5.2 trillion company. It trades at about 53 times earnings on the data we have here. And at that size, the bar is not, are they growing? The bar is, does the next data point prove the spending cycle is still accelerating? And this is where I want to be a little skeptical, in a good way. NVDA has a ton of ecosystem headlines. Network Bio building a cell-free RNA foundation model with NVIDIA. Foxglove using NVIDIA Cosmos for robotics data. And that Ports Pike campus headline where NVIDIA is tied to an exclusive AI compute infrastructure setup with OpenAI as the customer. Those are not tiny headlines. But here's the company desk question. What actually changes? Partnerships support the moat, sure. The stock, though, is going to care whether all of this shows up as durable revenue, margins, and forward demand, not just another AI logo parade. Now rotate that into Broadcom, AVGO. This is the cleaner sympathy check because Broadcom is not just another chip stock. The market uses it as a read on custom silicon, networking, and hyperscaler AI infrastructure. So, if NVDA is soft, but AVGO is holding firm, that tells you investors may still believe in the AI build-out. Just not every dollar has to flow through GPU enthusiasm the same way. If AVGO rolls with NVDA, then the market may be taking a broader pause on AI hardware exposure. That's the read. Confirmation or divergence. And then quickly, Marvell and AMD round out the basket. MRVL gives you the networking and custom silicon sensitivity, smaller than NVDA, but often very useful for seeing whether the AI infrastructure bid is broadening or narrowing. AMD is the more direct competitive read. If AMD is catching a bid while NVDA lags, traders may be leaning into share shift speculation or just rotating within the semi-complex. If both lag, that's a group pause. So the arc is pretty clear. Green market, mixed breadth, AI semis not all acting the same, and NVDA earnings next week becomes the gravity point. Coming up, the market mover scan is going right back to the names with the biggest live percentage moves.
Thanks, company desk. All right, markets desk is back on the movers board. And yeah, this board is still nasty. SPY up about 0.6, QQQ green, IWM green, VIX lower, but breadth is mixed. So these are not just random beta moves. RFAI is the headline, up 235%, 53 times relative volume. Howell is still number 2, up over 100%. And we're not redoing the whole deal story. Company desk just handled that. I just care if the tape is still paying it. USDEW is sitting third, but that's the warrant line, so I'm not treating that like clean common stock momentum. Then SDOT, KNRX, JUNS, all huge volume. On the other side, MI and CDTG are your red board checks, and CANG, quick note, is sitting under that 220 area we flagged earlier, so that one has not earned the clean breakout label yet. First chart, RFAI. Pull this up. This is the monster on the board, 4268, up 235%. Just over 2 million shares traded versus average volume around 38,000. So yeah, 53 times relative volume is real participation. But here's the catch. This is a shell company style name, small float area, market cap around 150 million, and the dilution screen has it tagged high risk. So the markets desk reads this as pure tape first, story second. On the 1 minute, I'm watching whether the bid actually builds after the impulse, or whether it's just air pocket candles. Round number map for me, $40 is the danger line, where a fast pullback starts getting slippery. 45 is the upside momentum check. Above that, you can see another sweep, but it has to hold with volume, not just one candle and a fade. No hero stuff here. When something is up this much, while the market is only modestly green, the first pullback tells you a lot. Howl next. And I'm not going to rehash the whole story here. We already know why chat's been staring at it. This is just tape check now. Price is sitting just under 90 cents, up about 108%. But the number that matters is the volume. 224 million shares. That's not a quiet squeeze. That's the whole room trading it. So what I'm watching is simple. Does the bid keep refreshing in the high 80-cent area, or do the pops start getting sold immediately? If this thing can keep accepting around 90 cents, the move is still being paid. If every push over that area gets slammed back down, then it turns into late-day distribution real fast. Sub-dollar biotech, high dilution risk on the board, so you respect the tape. You don't marry it. Now flip SDOT, totally different flavor. Agri-commodity name, consumer defensive bucket, and it's not doing a tiny little sympathy move. 15-15 area, up basically 80%, 13 million shares traded, about 18 times relative volume. That's a real abnormal tape for this name. The read here is whether $15 is becoming support or whether this is just a big morning expansion that's running out of buyers. If the 1-minute candles are holding above that 15 area with volume cooling but price not giving much back, that's constructive. If volume is still heavy and the candles are getting rejected under the prior push, then momentum is leaking. So SDOT for me is a $15 quality check. Above it, buyers are still defending. Below it, I'd expect the board to start treating it more like a fade than a fresh extension. All right, we'll leave it there from the market's desk. Scoreboard wasn't quiet. Howl hit that 90-cent flag. SDOT paid above $16.50. JUNS hit the downside check. RFAI 40 and 45. KNRX $0.50. Still the live lines. Green tape, mixed breadth. Don't force